Things have, I think, more than a year ago, maybe a year, 3 months or so. And then for all the investment, long-term investment, I use ThinkSavvy. And over a period of time, I got interested into technical analysis, and let's see what's going on with the technical analysis thing. And the more I learned, the more I lost on the technical analysis. It's a fact. But when you lose, eventually it will turn out to be a big winner. So the only key point here is to lose small, right, with the technical analysis. So let's get started. The goal of this session is basically to enable folks, ThinkSavvians, to think and explore and to know the basics of technical analysis. This is not going to be a high level, intermediate, or expert level. This is going to be very, very, very beginner level session. This is not going to be anything high level. So let's keep that in mind and let's get started. What are we going to cover today? And then let's see how much we can cover on these topics. So we are going to look at the charts. What's a chart? And the time frames of the chart. And we're going to look at the candlesticks. If we are not using candlesticks so far, like in the past many months, or maybe many months back, I was just using Robinhood, one single line. If it goes up, it goes up. It goes down, it goes down. And I'm like that. So we have candlesticks that every candlestick will tell us a story. There are types of candlesticks. Most famous one is Hykenashi, and then the regular candlestick. We're going to look at those. We have the range bars. We're going to look at those. That's range bars is also part of the candlesticks. What is support, resistance, or supply demand zone? Why is that so important? And after that, we are going to look at the studies like moving average, simple moving average, exponential, RSI, V-Vap, standard deviations, the famous ORB theory. I see a few people are joining the session for ORB, and then scanners. How are we going to scan using these studies? And then a word of caution. Give me a second. Sorry about that. So a word of caution at the very end. It's not going to take more than 3 minutes. So let's get started. So I'm going to share my screen here with the thinkorswim, and I'm going to go back and clear up every single thing that I have, and then I'm going to make it plain and simple. And then let's not look at Lucid. Let's look at SPY. I'm just setting up things, so don't worry. I'm not doing anything out of normal. Okay, so when you log into thinkorswim or any chatting platform, this is pretty much what you see. When you give a ticker, you'll see the chat, and then you will basically see what's grayed out here is pre-market, post-market, pre-market, post-market. What's here in the middle is actual market here, right? I'm not going to go into the thinkorswim platform itself to help you understand how to place a trade, or where to click to buy and sell. We're not doing that. What we are doing now is any chatting platform. Take any chatting platform. What are the basic things that we have, right? You take thinkorswim, or you take TradingView, or you take TrendSpider. You can take anything, right? So what are the basic things that you see, and then how do we utilize them to our advantage, right? So let me also move it back from Hykenashi to candlesticks. So this is a basic chart, and you have a story here. You have some candlesticks here going up, going down, going up, going down, going up, going down. So if you zoom in, each one of these is a candlestick. And how do we correlate these to a time frame is the number one topic, right? So here we have a time frame. What it says is, what does each candlestick represent, right? So if I say 1D, 1M, that means 1 day, 1 minute. What that means is each candlestick is 1 minute, and then you see a candlesticks for 1 day here, right? And then if you go down, what you see here is 5 minutes, 5 days, 5 minutes. What does that mean is you will see a whole time frame of 5 days with each candlestick representing 5 minutes. If you go down, you see 5 days, 15 minutes. That means you see a range of 5 days, each candlestick representing 15 minutes. 10 days, 30 minutes, 20 days, 1 hour. So let's go through a few of them and see how do they look, right? So this is 1 day, 1 minute. What that means is you will have candles that are representing 1 minute of price action, right? So let me take the volume down here so it will be clear for you guys. So each bar is 1 minute in this time frame. Well, now let's go back and look at 5 days, 5 minutes. You see, you have 1, 2, 3, 4, 5 days worth of data. And then if you zoom in, each candlestick represents 5 minutes. That means a candlestick will form after every 5 minutes. So this, when the candlestick is actually forming, the open and close will be fluctuating up and down. So this is 5 day, 5 minutes. Let's look at 5 day, 15 minutes. So this is 5 days. Each candlestick represents 15 minutes of price action. So what is the use of using 1 day, 1 minute versus, let's say, 5 day, 15 minutes? It's based on the personality of each person. Let's say I am very scared of losing money and I want to get in and out of, you know, or whatever. I'm not scared of losing money, but it's just that my trading style is that I want to get in of the first minute, and then I want to get out in the first 5 minutes of the trading day because, you know, my job, whatever reason, right? I don't have time. I cannot sit in front of the system for 30 minutes or 1 hour. I just want to get in and out of first 5 minutes. Or anytime I enter, I just want to get out in, you know, 10 minutes or 5 minutes, right? So what they do is they basically look at the 1 minute candlesticks, and then they basically trade with whatever strategy that they're going to use. And if someone is basically, you know, having some time and then they can sit in front of the system, they will basically look at, you know, 5 day, 5 minutes, and they have to wait for 5 minutes for the whole candle to form so they can basically go and trade, right? And then same with 15 minutes, 30 minutes. I personally use 3 minutes and 5 minutes and 10 minutes based on, I recently started using 10 minutes. And the reason why I'm using 10 minutes is to diffuse myself from the price action that's happening. What do I mean by diffusing myself from the price action that's happening, right? So let's look at this 10-minute candle, right? So this candle has formed, it fully formed at from 8:30 and it took till 8:40 to form, right? This is Central Standard Time. So it's just one candle that has formed in one 10-minute period, right? But if I look at 1 minute in the same time frame, from 8:30 to 8:40, where is 8:40 till here? So how many candles do I have, right? So I have 10 candles. Now, if I'm trading using 1 minute candlestick, when I see a red candle here, when I say I'm just giving as a generic example, I might think, oh, it's going down, so let me sell here, or let me lock profits here. Guess what happened? After that, you have a big candle, right? So to diffuse all the noise, all this noise here and there, I switch to 10 minutes or 3 minutes or 5 minutes. So based on your nature, how well you can manage your risk, or how you know, your mindset can accept the risk, you can switch from 1 minute to 10 minutes or 30 minutes or even 1 hour. I've seen people who do intraday based on 1 hour candlesticks. All these are default time frames, and you can basically add more time frames. I'm going to show it in a second here. So you click here on the time frame, and then you can go to customize list. And then you can click on add time frame, go to intraday, add how many days you want to see. Let's say you want to see 3 days. You want to see 20 minutes for some reason, right? Click on add. Okay, come here, scroll down, 3 days, 20 minutes, right? So you can see that. So what it shows is 3 days worth of data for you to plot previous day's high or previous day low or whatever you guys want to look at. And then you can look each candle representing 20 minutes worth of data, right? So that's the time frame and candlesticks in a nutshell. Well, not candlesticks. Candlesticks we're going to start in a second here. So that's basically a basic chart and the time frames. Now let's go look at the candlestick. What is each candlestick telling us? What is the story behind a candlestick, right? So each candlestick here will tell us a story. And what is that story? So this candle, this is a basic candle. I'm not plotting the Hykenashi yet. This is just a regular candle, the basic candle. So when you see a candle that's opening here, right? So that's a green. That means it opened low and closed high. It opened low and closed high, right? This means this particular time frame for the last 20 minutes, SPY has opened low at 469.08 and closed high at 469.92, right? That is what the body of the candle says, right? This in the middle, this is the body. The top ones are the wicks. That means during this candle, the price has touched these points, but at the end of the candle, these are the closing ranges, 469.09 and 469.93. But then the wick means the price has fluctuated up there and then came back and closed at this point. It fluctuated till this point, but the end of the 20 minutes, it opened at 469.08, right? Like the same thing here. This is the red candle. What that means is it opened here, which means it opened high at 470.25 and closed here at 470.09. That means it's a bear candle. So bull means opening low, closing high. Bear means opening high and closing low. What that means is in this 20 minutes, within this 20 minutes, SPY is bullish. This SPY is bullish. This is what we call it as a doji. Not quite a doji, but it's close to a doji. What it means is the close and open, that the open and close have closed within a very, very tight range. And what does that mean? Bulls are trying to push it higher like this, right? Like it opened here. If it closed here, that means the buyers are coming in. They're buying it from here all the way to here. There are sellers here, but the buyers are eating up all the sell orders. They're eating up till here, right? So this candle is a bull candle. It opened here, it closed here. What that means is the buyers are in control of this candle. They're buying all the way up to here. There are sellers. If there is a buyer, there should be sellers, but they're just eating up all the sell orders up to here. And same with this thing. It started here and they bought it all the way up here. And then this candle started. It started here, but then the buyers were not so much that they couldn't buy it up till there. You can see the body is not going up till here. The sellers are in control. The sellers are actually pushing it down. See, the body is almost like you cannot see the body. That's what means. This is the name of the candle is called a doji candle. Every single candle pattern has its own name. So this in particular is called a doji. What does this particular candle tell you? That means this candle, the bulls are in control. This candle, the bulls are in control. This candle, things have changed a little and bears have stepped in, meaning the sellers or short sellers, whoever they have stepped in and they started dominating the bulls and they have pushed all the momentum down. And then we see a doji. What they usually say is when you see a solid doji like this, that means the trend will reverse, which in this case has happened, but it does not mean it will happen all the time. It may happen, it may not happen, right? But luckily, this is yesterday's chart. This is yesterday's pie on the 20-minute candlestick. Luckily, for an example, like we can see, it opened high, it opened low, closed high, opened low, closed high, opened low, tried to close high, but then the bears took the control. From then, it opened high, closed low. This is another, it's not a doji yet, but then there is some push from both the sides that happened that resulted in a small body here. And then from here, the bears just took control. It always opened high, closed low, opened high, closed low, opened high, closed low, opened high, closed low. Here you can see, again, the bulls took control, right? Like it opened low, but then closed high. What does this tell us? With a huge body, right? With a huge body, what does this tell? This tells us that there is a possibility that the trend is going to reverse, which it did to some extent, right? Like there is a good push coming in from the bulls, and then they opened here, and then it closed here, followed by a follow-up nice bull candle. So if you're trading 20-minute chart, you will wait for this candle to fully form. And then as soon as the next candle forms, you will either enter here and exit here, or some people just trade candle by candle. They enter here, they exit here, right? And then there's a nice push, and then you can see there is again some tight range that has formed here, and then it basically ended up here at the end of the day, right? It opened here, the candle closed here. Just like how the market opens and closes, if the market opened here, for example, 470, and it closed, for example, at 468, that is the range of the market. It opened high, closed low. The same way, each candle has an open and close. And I got an example for you guys to see what is a candlestick. And then this is just Google. You can find this information anywhere. Whatever I'm sharing now is it's just Google. I do not have this information only with me. You can just, I can share these links, but I mean, this is just Google. I just Googled this like 20 minutes before this session. I just simply Googled it. So you can see it's the same thing, right? Whatever we discussed in the past. So open and close, open and close. This is the body, this is the wick. Now, each candle has its own name, like I'm saying, right? And then the combination of candles also have some names. So these are the bullish patterns. Like they have this one, a hammer here, because it looks like a hammer. And then this candle is called an inverted hammer because it looks like a hammer upside down. And then here you call it as a dragonfly doji because it looks like that. These are the patterns, right? And these are the bullish patterns. These are the bearish patterns. These are all like the textbook patterns. And there are many, many, many patterns and many, many names. Like, see, this is a doji. We just looked at it, right? A doji means there's a possibility that there is a reversal. Why is there a possibility? Because buyers are stepping in, sellers are stepping in. There is no decision. That's a doji. And based on where the body is forming, there are also some names for each candlestick. And we are not going to go into all of these candle patterns and, what does what, because this session is not meant for that. This is going to be purely basic. I just want you guys to understand that each candlestick has a story to tell you guys. That's all. When you look at a line, I can switch back to a line. And if I go back, what does this tell me? Where do I buy? Where do I sell? If I'm just looking at like this, right? Like this is what Robinhood showed me for many, many years. And I have no idea. I mean, like, okay, so it opened here, it went there, okay, it went down. What is the guarantee it doesn't go up? I'll buy here, I'll short it here. What's the guarantee that it doesn't go up? So I don't know any story here, right? On a line chart. And if I go to a candlestick, give me a second. Yeah, because I muted myself because I'm having a bad throat, and I cannot unmute without the admin unmuting me. Sorry for that. So this is basically the story and the concept of what a candlestick is. Now, let's say you have decided that the market will go down that day, like even before the market opens, like nothing has formed. You're here at around 7:40 Central or 8:40 Eastern. You're right here, sitting in front of the system. For some reason, you thought that the market is going down. It will go down. That's what that's your gut feeling. And what basically you thought was like, okay, so let's wait for some time, and then let me see where the market is going, right? Or you'll think bullish or bearish. You will have some conviction, and you'll decide like, okay, I'll go up or down, and then this is my stop loss, right? So what the regular candlestick shows is like it basically tells you if this candle is bear, it will blindly show you that this candle is bear. If this candle is bull, it will blindly show you this candle is bull. There is no if then buts, right? If it will simply show you whatever it is the story, right? But then, for example, you have shorted here, you bought some puts on SPY here, and then immediately you see this candle here, for example, right? Or this candle here, right? You might think, oh, okay, so I want to sell it, right? I want to sell because this is a green candle. I think it's from here it's gonna go up. But what happened is it went down, right? So there are some ways to soothe our mind, right? For example, you look at this. This is Hykenashi, right? So I switched from a regular candle to a Hykenashi. You can find this under style, chart types. You can pick whatever you want. You can pick a bar, candle trend, Hykenashi, line area. We will only touch candle and Hykenashi for the session, right? So this is candle, right? You see here, you have a doji, and then you have a red candle here, and then from here you have a downtrend, right? But then once you have a red here, there is a green here. What will you do? Some people will actually exit the position because, oh, this is red, this is green. I want to exit. I mean, no. This is against my plan. So to soothe ourselves, to soothe our brain, there is something called Hykenashi candle pattern. What it does, it averages the candles, and it always starts from the middle, center of the previous candle. The start, like the open of the candle, will always be the center of the previous candle. From here, it will go up, or from here, it will go down. It will not start where the next candle is forming, unlike the traditional candlestick pattern. It will average out the price, and it will show in a trending way. So if you have to look at this chart right here, and then you are bearish around 740 or you are bullish around 740. So you're bullish. The first candle is bullish. So you will enter here, and then you will enter here. You will enter here. You'll stay till here, and then here, because it has averaged it out. Only when there is a real downtrend, the Hykenashi will show you a down candle. So you can stay in the trade till here or here, and then you can enter here, and then you can exit here. It will actually smoothen the price action in the Hykenashi. That means it will make you stay in the trade, unlike the candlestick where you enter here, you exit here, or you enter a short position here, you exit here, right? Or here, you'll exit here. Unlike that, Hykenashi candles will let you stay in the trade, because it will only show a reversal if there is a true reversal of the averages. And you can actually see that, you know, the candles are like the body of the candle is becoming small and small and small. I mean, this is not any day. This is just a random day. This is just yesterday. This is Friday. This is Friday's candlesticks. This is Friday's chart, right? So if you were trading SPY yesterday, if you are trading on 20 minutes, this is how you would trade. You will have the candles going up. If you're trading purely on candlesticks, you can just find a reversal here. Your edge could just be that whenever I see a 20-minute candlestick turning red, I will enter a short position, and you would have made a really good money yesterday. Like you would have made, like, if you're playing options, you would have made like maybe 100 to 200% yesterday, just based on this. You don't need any indicator, but you should have your edge. Like if a Hykenashi candle has turned from green to red, it's opened here and closed here, I will enter a position. How is the average calculated on Hykenashi? Good question. And for you, I have a page that explains how it does. And then I think there is a formula somewhere here. If not, then Investopedia has the formula on how it is. So Hykenashi candle explained, just like a simple moving average. Moving average is the next topic. We will get there. Basically, what it does is it basically averages it smoothens the price volatility, use the traditional ways, and it basically shows us in a trend. So candlesticks staying green during uptrends, and they stay red during downtrend, and also sizes in the body of the candle will change based on that. So let's see. Oh, here you go. Here is a calculation, Kumar. So open equal to half the previous bar open price plus previous bar close price. Close equal to 1/4 of open plus close plus high plus low. That's the calculation. Do I really know this, or do I really have this in my mind? No, but you know, if you really want, you can take a screenshot of my screen right now. This is how the Hykenashi is calculated. Now, I will keep it for a minute here if someone want to really look at the formula. But the point is that Hykenashi will basically smoothen, it will basically make the candle pattern smooth out and show you the trend only if there is a trend, right? And then now let's look at the downside of it, right? So let's say there is a red candle here, right? And you have a full bullish pattern here. There is a red candle here. And then what is the guarantee that this will be a red and this will be red and this will be red? There is absolutely zero guarantee. No guarantee at all. It can just come down and go up like this. What will you do? You enter here, you exit at the next candle if it is green. Right. So this is a Hykenashi candle. So let's look at our schedule now. So we looked at the basic chart, we looked at the time frames, we looked at the candlestick, and what is the open and what is the close of a candlestick and how it is determined, right? We looked at Hykenashi versus regular candlestick. So before I go to range bar, I just want to show you one small thing and why switching from 1 minute candlesticks or 1 minute range to a higher range is really helpful in your trading journey, right? So let's take this, right? So from 8:20 to 10 o'clock Central Time, I see a bullish pattern in the market, right? So let's switch back to, let's say, 1 minute and see what is the same time frame telling me. So open itself is low, so I would have shorted here, and then I would have anticipated it to go down because hey, why not, right? So it opened low and then it continued low. It probably will go down. But then what happened was it actually went opposite direction. This is 1 minute candlesticks, right? 1 day, 1 minute. So each candle represents 1 minute. The one that we saw earlier, it's 20 minutes, right? So it went up till 10 o'clock. Where is 10? Somewhere here, right? So till here, you have several greens and several reds. So you will have to really enter here, exit here, and again enter here, long position, exit somewhere here, enter a short position, exit here, enter long position, exit here. I mean, if you have an account more than 25,000 and you can do unlimited trades, go ahead, do 1 minute. There are hedge funds. There are real big hedge funds and money managers who really trade based on 1 minute candles. So there is nothing wrong in trading with 1 minute candles. But assuming that majority of us on this call are under 25,000 and are, you have a PDT rule, you cannot trade everything you see, right? You have to pick and choose. So you can switch to 20-minute candle here and then take a trade that's obvious. This is obvious. If a 20 minutes says it's red, the chances are high, the probability, I'm going to stress probability, the probability is high that the next candles will go down. And there is also a probability it may go up, but then you will cut your position, right? So that's the importance of the time frames and the candlesticks, and why time frame and candlestick tells us a story. It is trying to tell us some story. All we have to do is listen to what it is trying to tell us, right? So this is basically the time frame and the candlestick. Now, let me switch gears and look at the range bars. And I'm not going to stress much on this range bars because there are a few guys that are really interested in the range bars when I posted it in the group. So I want to quickly touch that and tell you what exactly a range bar means. So if I click on the time frame here and then click on the time, these are my favorites, right? These are the ones that I customized and saved as favorites. And then if I go, before I go to the range, I want to show you one more thing here is like from a time frame, if you're an investor, you can actually go back to 1 year, 1 day. Each candlestick represents one single day. And let's assume you're trading based out of yearly chart or daily chart. This is 1 year, 1 day. That means you have the data for one full year, and then you will basically trade based on this. And then I can tell you that like there are many hedge funds or money managers who trade based on 1 minute chart. There are many hedge funds and money managers who trade, they do not do intraday, but they do swing trading based on the 1 day chart. How do I know? How do I know all of that? I happen to speak with some of the money managers, luckily, and they told me this. And then there are many YouTube videos that say the same. So what they do is like, they have a simple strategy. I'll tell you how simple that is. If the candle is green, they will automatically assume their edge is that they will think that the next candle will be green, and then they will go long on the very first day, and then they will wait for the next red candle, and then they will exit there. Ironically, when there is the success rate of this theory appears to be more than, I think, 63 something. Like if the previous candle closes green or red, the next follow-up candle will be green or red. Ironically, that appears to be having greater edge than many of the theories or the studies or the concepts that we follow. Simple, as simple as that. I'm just opening SPY. I mean, you can look at whatever you want, right? Like, let's look the most volatile stock, right? You can look at Tesla, right? So look at this. When a candle, this is Hykenashi again. I do not trade using the regular candle. I trade using Hykenashi because I like Hykenashi. So what they do is, if the candle is green, if the candle closed green, or let's say this closed red here, right? And then they will enter a short position. The next candle is green, they exit it. Next is red, they enter a short position here, 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 and then they will exit here. And then this is green here, they will enter a position here, and then they will ride all the way till here. They will exit here. And the next candle is green, they will enter here, they will ride here. So what you see here is there will be some losses. Like in this case, there will be some losses, but the loss is small. But look at this profit from here all the way to here. See, there are losses, but then look at this one, massive, right? So all your edge has to do is to minimize your losses, like here, right? Like the losses are minimum, but then the profits, right? Like if you enter a short position here, it will let you ride all the way till here. If you enter a long position here, for example, on October 7th, for example, or October 8th, if you just follow that simple strategy, no RSI, no V-Vap, no moving average, I'm not telling you anything. I'm just showing the basic candlesticks and trying to form an edge, which actually many money managers use. You enter a long position here, you would have gone from 799. All you have to do is buy a Tesla call worth like a 2 months away call, and then you would be riding it all the way here, and you're still in the position. You would still be in the position from 791 all the way to 1243. Well, what happens if you would have entered the position on 5th, for example? You would have exited with a minor loss. So then what happens if you enter? You have to take every single trade. Eventually, at the end of a year, you would be net positive in a huge way. I mean, look at this thing, right? From here to here, right? If you invested if you bought a call with like 5,000-6,000, I'm sure that's probably many hundred, maybe 100,000 or something. If you bought a 2 months away call, or you can simply buy a common stock, right? So this works in the candlestick, and the patterns work in a smaller time frame, from 1 minute to 1 day to weekly. Each candlestick represents a week. And this is for 3 years, 1 week. I also happen to look monthly candles. Look at this. It is smoothing the whole process. How many times we would have traded using, we entered in the morning, exited in the day, but all we had to really do is this is kind of investing, basically. Not much then. Like, it's also kind of trading. It's like a swing trading. You can take it as a swing trading, or you can use it for investing as well, right? Like, when do you enter? When do you exit? You can just switch to monthly candles here, 3 years monthly. And then you say like, okay, so I entered here on October, whatever year this is. I think this is October 2019. And then you can write it all the way. You tell to yourself, like, whenever there is a red candle on Hykenashi, because Hykenashi itself is smoothing the whole thing. Whenever there is a red candle, I'll exit. And then I will enter whenever there is a green candle again, which you will enter here, exit here, might take a minor loss, but look at this, you took a huge profit here. Small loss, big profit. Small loss, big profit, right? So this, in a nutshell, is the time and the candlesticks. You can use this for day trading. You can use it for swing trading. As a matter of fact, you can use the candles for your long-term investing as well. Nothing wrong in that. But again, use the data that we have here. This is SPY. This is monthly, and then you can basically enter here. This is an unusual activity, but you would have exited here, even though you see a major drawdown here, right? So let's see. Yeah. So again, right, you entered here, you exit here. When I say entered, let's see some of the questions here. So for day trading option, should we go same week expiry, 3 weeks? That depends on. For day trading, if I am a day trading option, if I am doing a day trading, I would enter and exit on the same day. That's called day trading. I buy, if I try to buy SPY, I try to buy the same day expiry, because SPY has 3 weeks expiration, and then if I'm trading something else like Tesla or something that doesn't have like, same day expiry, I'll end up buying the same week expiry. I know theta will kill me, but I know that I will enter and exit within like an hour or two. So when you say exit, do you mean by exiting the next trading day or on the same day? Can you please clarify? So let's look at the 1 year, 1 day, right? So let's say you're trading SPY, right? So this is a green candle, right? So when I say enter position, I have to let the candle form, and then I will enter here. And then I will ride all the way up here, and I have to let this candle form, and I will exit at the end of this day or the first thing next day. So my trade is between 329 to 421. So after the day is completed, yes, after the day, you have to let the candle complete. At the end of the day, you will almost always be certain, like if you only have like 30 minutes left in a day and the candle is like this, there is a minor chance that it can just go up and close up, but then it's highly unlikely that you will close green for the day. So you can exit at the end of like in the last 1 hour of the day, or you can wait for the next day to see, and then you can close it here. This is swing trading. This is not day trading, by the way. You will know whether red or candle month after discuss. Yes. So this for RT who is asking, you will know when the candle is red or green after the end of the month. Yes, that is true. You will only know once it is done. But then what you can do is where is this thing? Oh, monthly chart here, month. So we are in November, right? We are just into 6 days, but look, we already have a candle here, right? So we already have a candle that's forming, but then it did not close. It will only close at the end of this month. See, this is October candle, it has closed. So if your strategy says that you have to wait for the close, no matter what happens, you have to wait for the close. And a person who would have entered here, for example, he would have entered here. No matter what COVID news was here, he has to wait for it to close. That's sticking to your plan, right? There is a chance like at the beginning of the month, it could go halfway down and then it will actually close like a big bull candle. It is a possibility, right? So you never know. And then there are many people during the COVID crisis in last year, March, that were like, oh, so when do you know what shows you closed? Is the wick up or no? The close is this. The candle has to move from here to next candle. This is October. I know it is closed when the November candle is formed. November candle will start. That's when I know this is closed. Look at last Friday, DAL and save. Okay, so we'll look at these questions at the end, and then I'll try to complete the schedule here, and then we will slowly go through all the questions one by one. Every single question, we will go one by one. Okay, but then you get the idea, right? Like in the COVID crash, people will think like, okay, so how do we know that it is reversing? There is no one in this world that can tell you it's reversing. No. There is someone in this world that can tell you that the trend is reversing, and that's the candlesticks. You can actually look at it and then say like, okay, so this has reversed here, and you're giving it a month actually, and then you can enter here and still would have made a lot of profit. You would have still entered, you would have still hopped in June and made a lot of profit on SPY. Right, this is an indication. Is there a probability that it could go down in June? Absolutely, there is a probability. But guess what? You have at least some knowledge, right? You know that the trend has reversed after a major downtrend, and then this happened, right? So, and then that's the reason why people who are bearish on the overall market tend to lose more than the bulls on a longer term, because SPY appears to be more bullish than it is bearish, right? So if someone is very pessimistic on the market, think twice, because the history does say something else. It says I am bullish than bearish. I have 1, 2, 3, 4, 5 months that closed, opened high and closed low in a whole 3-year period, right? And then you can actually go to the max if you want. Like you can, if you're really interested, you can go back, add a time frame, and then daily. You can go to the max available and go to the, you can actually do it at quarterly basis, quarter on quarter. You say like you say like, I don't have time to look at it month on month. I will just enter every quarter, bullish or bearish. This chart right here is showing from around 1993, about when I was like probably born. And then you can be bullish on SPY at this point, October 1995, and then you can exit the bull position in the 2000 crash, the big crash that has happened. And then you can actually do it in the same. When do you know the great, like the dot-com bubble has ended? It will show here. You don't have to do anything. You can just sit back and relax and just look at the charts monthly. How do you, people say like, oh, how do I know that it has reversed? What you have to do is you have to go back, look at quarterly or monthly candles and see every quarter how's the market doing. Just sit back, relax, and then just buy calls, buy stock, whatever you want to do, and then ride it till here, and then go short here, and then exit the position here, go long here, exit here, go long here, exit here, go long here, ride it till here. See, this is quarterly. If you look, every time you enter a position that you thought it's gonna be bullish, if you have a loss, it will almost always be a minor loss. And I'm not just blabbering or just telling some created story. This is telling you the story. Okay, so we have many questions, but we'll go through them at the end. So this, in a nutshell, is a time frame and the candlesticks. It's very important when you're looking at day trading, swing trading, or investing. You have to first understand these things. This is basic. This is 101. This is very basic, right? So let's switch back. See, there's so much disturbance here, right? Like that's the reason why many day traders lose money, because there is a lot of noise. But if you switch back to the maximum, very less noise, right? So you can just sit and ride, sit and just ride. And then look at this, right? And that's why many people are telling me, or not me, just many people are telling that this is a bubble right here. Because you see the strength in the candles here after the COVID crash. Like it is unusual. Like from 1993, this kind of pattern has never happened, and no one knows when this will end. And it may not end. It may just go up like that. No one knows, right? So all we have to do is look at the maximum. I don't look at quarterly, to be honest. I will look at monthly. I will look at monthly charts. And I will try to plot some price levels that I find are interesting, not on SPY per se, but for example, I think I was looking at Disney the other day on the monthly charts, and I was setting a trading zone, right? Like it made a big move from here to here. See, it is trading in this, it's consolidating here. And then what I'm trying to look at is like on a monthly chart. If I go to weekly, it almost tells me the same story, right? See, it's consolidating in this range. And then when it breaks, it will make a similar move like this when it breaks this. See, this is my consolidation range. The weeklies, the monthlies are very important for day trading. For me to enter and exit a trade, I actually look at monthlies and weeklies first, and then I go down to the yearly, dailies, and then at the end, I will go down all the way to today will not work because today is a weekend. I'll go to my 10-minute chart, and then I will trade based on that, based on my ORB or whatever I use for a technical. So if you want to change it, all you have to do is you have to go to the time frame, click on daily, favorites, click on customize list, add a time frame, and here is where you can add whatever time frame applies to your trading style. All right, now let's move to the next topic, which is the ranges, right? So the range is nothing but each candle here has to form every 10 minutes, right? So here it says 10M. That means each candle has to form every 10 minutes, right? It has to form every 10 minutes. Now, what I found interesting is that there is something called range and a tick within the Think or Swim platform. It is on the trading view as well if you're using it. So what is tick is, I think in the futures market, they basically play on tick by tick basis. Like I think every tick is 25 cents or 25 cents or something, or $25. I don't know exactly. I'm not a futures market guy. So they basically trade on a tick by tick basis. I think 25 ticks is when 25 points is when you move one tick up. So I don't look at tick, but what I look at is the range. So what I do is I'll go to 1 day, or I can go to like, let's say 3 days, right? And then this is Disney. Let's move back to SPY. And then let me go to the time here, go to time frame, go to range, go to 3 days. And then let's just say for the sake of example, I'm taking it as 50 ticks. I don't know exactly how the tick is calculated. It's based on how much the price has moved. It will take as one tick. So what it does is, it doesn't matter. It doesn't follow the time. What the range chart does is it does not follow the time. It does not follow the time. And I'll tell you how it is important and why it is important, the range chart, right? So the range chart is important because you do not have to wait for whole 10 minutes to tell if the price is moving up or down. You do not have to wait for it. Let's just say I selected a range chart. So this candle formed at 8:33, 8:35, 8:42. So I do not have a candle that's formed until the price has moved to a 50 ticks up or down. So it has to move 50 ticks up or down for the candlestick to form. It does not respect the time at all. So you will not have a tick or a candle that forms at the first 5 minutes or 10 minutes based on your time frame. It forms based on the price. And how is this any valuable, right? Like let's say it will basically show you the information only when there is information, only when there is a price that's moving, right? You do not have to wait 5 minutes and 10 minutes. For example, right, let's just say this is your stop loss, for example. Let's just say, for example, this blue line here is your stop loss. Let's just say the candle is forming, the 10-minute candle is forming, or the 20-minute candle is forming. When the candle is forming, it will cut your stop loss here, and it will go down, go down, go down, go down, go down. It will keep on going down. But then you will not close the position because the candle has not formed yet. Most of us will probably close it once it crosses here, but that's not the way to trade. You have to wait for the candle to close. That's important. So if you have a 10-minute candle and this is your stop loss, the candle may go down, 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 down. It will not close till the 10 minutes is done. It will not close. It may actually close here. A 10-minute candle can start here and it may close down here. And then, because that is what your trading plan is, then you have to exit here. Because who knows, it may go all the way here and it can go all the way up, right? So if you're trading using candlesticks, you have to respect the time frame. But if you think like, no, it sounds stupid because I know it obviously crossed my stop loss. Why should I wait for it to go further down? Well, that's when the range comes from. So you can basically plot a range and then it gives you by every 50 ticks, or you can change it to, I tend to use average true range, ATR, average true range of every of the market moment. So it will basically show me where the actual move is. Like, is the price really moving up, down? It will actually show me then and there. So it depends. You can use the range if you are, if you find waiting for the whole 10-minute or 20-minute candle to form, and then take a decision. It's up to you, right? So you can do that. And then the good thing about the range chart is, like, if there is no breakout, there is no breakout. It will simply show you that there is no breakout. Like, look, it tried to go till here, and then it traded sideways. The candlestick, you will probably see the same, but you have to wait for every single tick, every single candle every 10 minutes to see, oh, is it going up, is it going down? I mean, this doesn't do that. I mean, you have hardly few candles in this range, because there is no price movement. If there is a price movement, it will form from here, from 119. This is when our Powell has a good news a few days back. And then from here to here, there are more candles than there are from here to here. Like in the last 2 hours, there are more candles than there are for the rest of the day. That's because the price is moving. The candle will only form when the price is moving. The candle will only form when the price is moving, right? So you can use this in a bigger range as well, like, let's say 1 year ATR. So this is for yearly, right? And then you can actually see where the price is moving aggressively, right? Like you can see here, the price is moving. You can see the consolidation here, right? You can see the SPY has consolidated here. And then you will really see a price moving if there is a price move, right? And then I can switch it from ATR to, let's say, 100. Let's see, 100. 100 doesn't look good. So you have to, mix and match how it's working. 300 is also not good. So 1000 ticks. All right. So the candle will only form, and it's the same thing, right? It always starts from the middle of the previous candle and then closes. So you will only see a movement when there is a change in the price, right? So and then see these are the after hours, and then there is a huge price movement in the after hours. So that tells you some story, right? Like, see here, there is a movement during the after hours. The majority of the move is in the after hours, right? In this particular time frame. So that tells you some story. So to eliminate time from the equation, you can use range charts. That's useful if you want to really get down to the price action and eliminate the time factor. You can do that. So that's the range charts. So the range bars, range charts. So let's quickly look at support and resistance. So what is support and what is resistance? Many people probably already know this. I'm actually telling all of this assuming that you are brand new to the whole charting. So if you are feeling bored, like, hey, I already know this, you know this because you already know this, and this session is probably for the beginners, right? For not the people who already know all of this. So what is support and what is support and resistance, and how do you use it for, for trading, right? So let's look at Tesla, because it recently broke its support level and resistance level. It's also, you can call it supply demand. Some say support resistance is different from supply and demand. I kind of disagree. That's my personal opinion. I personally see supply and demand are same as support and resistance, because you don't simply draw a line and call it as support because there are no buyers there, right? So you have to draw some lines and understand that why is it support and why is it resistance, because there is supply and demand there, right? Okay, so this is Tesla. And I have been looking this. I'm sure I would have posted this in the chat on the options group, but then I will go through what I'm talking about when I talk about support and resistance and supply and demand, right? So what happened here? Let's look at this. This is the daily chart, and I like supply and demand more on the daily charts and the weekly charts and the monthly charts. So let's look at the daily chart for the sake of this discussion, right? So what we have seen here is a significant jump from Tesla between November, I believe that's when they have added Tesla to S&P 500. There's a significant jump from here all the way here, from all the way from 447 up to 899, like a 100% jump. And then it stopped here, right, at 898 somewhere, right? What does this mean? What this means is there are no more higher bids on Tesla. Like everyone in this world thought that, okay, this is high. We don't want to buy Tesla at 899. We don't want to buy it at 809. Not one person, right? They do not want to buy Tesla. So there are no more buyers. There are no more buyers. There is no more demand from here up here at this point, right? And then what happened was like there is more supply at this point. There are buyers, but they're not bidding it up to 899. They are trying to buy Tesla under 898. What this line here is, this is called resistance, or you can say this is a supply zone, right? So what I do here is I go to drawing tools here, right here, and then I select this rectangle here. And what I do is not here, but I try to cover the wick, and I try to cover as many lines I can. And then this, I will go to edit properties. I'll just change the color to green, just so I know it's once it's crossed, I should actually do it as red because that's resistance, right? So let's do this. Okay, so this is resistance. This is where the supply is. It tried to break it once, try to break it like every single time it tried to break it. It got a lot of supply here. The money managers, hedge funds, they are basically selling. And then, it tried. It couldn't, it just broke somewhere here. Maybe there's a news. It went like this, came back down, and then it's been trading sideways ever since. Now, what is this chart telling you guys? What is this telling is, like, you don't have to do anything. All you have to do is open a yearly chart and plot this demand zone. And then you can also plot another zone here. And then you can call it as a supply zone. Demand zone, sorry. This is a demand zone, this is a supply zone, right? So what is this telling me? What is this telling me? What this tells me is like, okay, this is the ultimate break. Oh, I actually wrote it here. Tesla breakout level, 898. This is the ultimate breakout. When Tesla crosses this with volume, and then it just goes up. Now, where is the volume? Okay, so I go to here, and then I go to equities. I go to show volume subgraph. There are many studies for volumes. We'll go there when we get to studies, right? Okay, so here, we entered here, look at this bottom here, this is the volume. What is volume? Volume is nothing but you and I. We are the volume, along with hedge funds and money managers and all of those guys, right? So this is volume right here. Look at this thing, look at the volume here. A breakout is only a breakout when there is a volume, when there is volume. Look at these bars, each bar here represents volume. Look at all these bars and look at this one right here. This has not happened. This length of this much volume has not happened till March of this year. Like this has been consolidated. This is an indication for me that Tesla is breaking out. And then you don't really have to catch this candle right here. You can actually plot Tesla on your charts. You can go back to your daily charts or 5 minutes or 10 minutes. Anytime after October 25th of last month, October 25th, you can plot Tesla on your charts on your intraday, like 5 minutes and 10 minutes, and simply look at the ORB. I'm telling ORB because I use it. You can trade it based on V-Vap or whatever you want. You would have made a lot of money just with this candle here. This is an indication here. It broke out. That's called a breakout. This right here is called a breakout. Why? Because it is breaking the biggest supply zone here with volume and price action. Volume and price action. These are the only two leading indicators. Everything else that you see, everything else that I say or anyone say is almost useless. They're all lagging indicators. What is a price action? A candlestick is a price action. Where is volume? Here is the volume. Apart from volume and price action, there is absolutely nothing in stock market that are leading indicators. Those are the only leading indicators. Okay. So here is a supply zone. Here is a demand zone. So how do you know this is a demand zone? Tesla has come here once, twice, thrice, fourth time, fifth time. And then if you see some price point where it is touching and making a sharp move, that means it has a strong demand zone. What I've learned over over last months or years is like the hedge funds, when we see so and so hedge fund has bought so and so Tesla shares, like millions and millions worth of Tesla shares. What's happening is, right, they cannot actually buy it in one single day. They will bid the price up if they do so. They cannot do it. If they want to accumulate, let's say 1 billion worth of Tesla, they cannot do it. Even if they want to do it, they cannot do it in one single day for the average price they want. Because if they're really buying with 1 billion, I'm just giving 1 billion as an example. Maybe 1 billion may not move it up. But let's just say, for the sake of this example, some hedge fund want to buy Tesla and they have 1 billion in their fund to buy Tesla. They come tomorrow, they cannot do it. Because if they buy it at like 1243, they buy it for 2 million or 3 million or 10 million, it will bid up, it will go up. Because there is more demand, it will go up, the price will go up, it will go to like 1250. And then it will go up, and it will go up. So they will not get their average price of 1243. What they do is that they will buy at the best price. Whenever it comes to a sharp spikes here, that means a huge money manager or a hedge fund is just blasting it off with a big order. And then that's why you see this spikes as soon as it touches one level. Why is it just touching one level and going up? Why is it not like going down here and then going up? Well, it happens in some cases, but for a stock like Tesla, it is very clear that the big hedge funds and the institutions are basically coming and buying at this point. I'm not telling this. You don't have to ask anyone. You can just plot this and just draw lines and see where they're buying, right? My understanding is that most hedge funds use the daily chart to do this thing. They might be using weeklies as well. So keep that in mind. So what is a breakout, right? A breakout is when the demand exceeds the supply. There is a huge demand here. Whoever is pushing this, hedge funds, or maybe the hedge funds thought like, hey, they were waiting here, and then from there it never touched this point. It never touched this point. It's just going. The retail are buying. Maybe they thought like, okay, so maybe we'll just buy it, or they will just bid it up here and then let the retail take it up, right? What are tricks they are doing? It's not our business, but what all you have to know is like, one, it breaks the resistance or the supply zone with volume. Do not do this. Do not buy this if there is no volume. You don't have to do it. So you have to look at the candle here. You don't have to participate in this trade. You don't need any scanner to participate in this trade. All you have to do is come back after your office, look at the news. Hey, Tesla made a big, massive move. So you will come back. And then let's just say you don't have this candle. You only have this candle. So what do you guys think? Do you guys think from here it will go up, or because it made such a big move, it will go down? And then it is impossible for any of us to tell that without actually going back and looking at the historical information. So it made a big move with a huge volume here, And it made this move is significant because it has actually broken its previous resistance or a supply zone, right? Whoever have accumulated till here, whenever Tesla touches this, they will try to sell, right? If I have bought Tesla at 898, I was holding it for a whole year, I would be the first one to sell it here. But the demand is such that it took up all the sell orders and then it still broke above, and hence the significance. You can draw this. It's not you can. I would encourage you all to first draw these supply and demand zones. There are many videos out on YouTube. If what I've told you guys is not clear here, there are hundreds of videos outside for supply and demand zones. Please take time to draw the levels and then see how the price is acting between the supply and demand zones, right? And then if you want, you can set an alert on Thinkorswim. I don't know how you do it on TradingView, but then you can create an alert here, and then you can just write like Tesla breakout, whatever, right? And then I can actually show you, right? So look at my alert, see? See? BAC breakout, skills breakout, PayPal breakout, Jumia breakout, PLTR breakout, PayPal breakout, S breakout, KHC breakout. I have breakouts and most of them got triggered recently. I usually have a full list till here for all these breakouts. These are my alerts. These are my breakout alerts. I'm not telling you what I'm not doing. I'm telling you what I am doing truly here. These are my alerts. You can set the alerts. So all you have to do is look at each and every chart and then draw the levels. And then how do you set these breakouts from the tool? Okay, we'll get back to questions. I should not distract from the questions now. I will answer every single question either on this call, I will respond back to you on this chat. Okay, so this is the supply and demand zone or support and resistance, very important. You can do it for anything. And then let's look at Lucid, for example. And then this is the ultimate breakout. When this happens, when Lucid crosses 64 with volume, I'm going to tell you right now on this call, that's going to be an ultimate breakout. But look at this. It doesn't mean like just because the Tesla has a majority of the supply zone here, it also has a supply zone here, right? When it broke this, it also is an indication that it will go up, right? So you can also draw a small supply zone here if you want. I try not to draw too many. So this is also one supply zone, right? So this is also one supply zone. So if you want this supply zone to be extended, so what I usually do is I will keep it for next 20 days. So even if I look at my intraday chart, I know, this zone is there, right? So this is one supply zone. After this major supply zone, this is another small supply zone, right? And then you have one indication. You don't have to take a trade here. You have one indication that, okay, the minor supply zone or the midterm, that's what I call it. The midterm supply zone or the middle supply zone has broke and it is approaching towards the major breakout, and see what happened, right? And then I can show one more example on HD, right? So if I've been looking at HD, right? What I have to do here is, for example, I've drawn here a supply zone. And then, the price reached here, rejected, here, rejected, here, rejected. Do not buy if the price crosses this. Now look at this one. The price is crossing this and there is volume. And then if you have a doubt, is this volume, well, the Tesla volume is significant because Tesla is everyone's hot favorite, right? Look at this volume right here. And then let's say I will draw a line here. Okay, so if you have a doubt, like, okay, so I understand what you're saying, but there is no volume here, right? So, okay, so I've drawn a line here, and then let's zoom into the volume for a second, right? Because like I said, okay, so this volume is here. how many times did HD touch this level of volume in the last 1 year? You have to look at that, right? Here, it has a huge volume, and then you have to look at from here to here, when the price dropped from here to here, how many times did HD make this much volume or this much volume here, right? So you see all these gaps here. That means HD did not have this much volume in the previous days after this drop right here. And majority of these days are because they are just selling off everything, right? And then all you have to do is right click, create alert, type HD breakout, and then click create. It will create. It will fire now because the price, it will, So when it is market hours, it will basically fire and give me an alert because it is actually above this, right? So all you have to do is set an alert here. Now let's just see what's happening right now, right? So it's at all-time high. It's at all-time high. All-time high breakout, right? I've set another alert. So it has reached all-time high. It went down. It's trying to reach it here. It's consolidating sideways. And that's another breakout. That's another setup. When a stock is at all-time high, it is consolidating sideways. What is consolidating? Consolidating means it is not going drastically down. It is not going drastically up. It is just going sideways. See, it's going sideways. So when it is consolidating, you can keep an eye. If it breaks this with volume again, that means it's going to take another leg up. If you miss this, look for this. Now, another example, and I will probably close this topic with this example, is Disney. So it is consolidating in this range from quite some time. And I'm going to tell you right now on this call that when Disney breaks this, which is probably possible in the next few days, hopefully, because it made a similar move in the past, but it couldn't break it. But when Disney crosses 185, 166, 166 is for the down price. It's like a strong support here, right? And then when Disney crosses 185 with volume, that's gonna be a huge uptrend for a few days. It will continue for a few days. When a stock is consolidating sideways for many, many days and then does a breakout, it will be for a few days. What does that mean? You can set an alert, and then by the time you see the alert, if the stock broke out and just hitting, don't worry, just keep it on your watch list. And then what you have to do is, go to the smallest time frame and then plot it on ORB, which we will get into the next topics here. How to trade these breakouts on a daily time frame. We will look at it in the next topics here. But it is important for you to first know what stocks should be on your watch list. For example, yesterday I was looking at Lucid. Why am I looking at Lucid? Lucid is done, right? The story is done. See, it made a big move here with huge volume. It's done, it's over. But what happens is that usually when a breakout like this happens, it tends to stay up like that for a few days. So hence, I have Lucid on my watch list. And every time Lucid makes a move, I will get an alert. Every time, every day. So I will do that. I will watch it for maybe a week or two till it starts consolidating or going down. Even if it goes down, I will still take a put position and I will short the hell out of it. My trading style is I have zero bias. I am here to make money. If it is going up, I'll buy calls. If it is going down, I'll buy puts. End of story. So there is no emotion, no sentiment here. See, it broke out here. It's going up. I will wait for it to go up and up and up. I don't know how far it will go, but then if it makes another move like this, I will be the first one to short it and make money out of it. I'll make money if it goes up. I'll make money if it goes down. That's how you should be when you're looking at these breakouts, right? So if you look at the HD breakout, I was actually in this position here. I made a lot of money on HD when it moved from here to here. I yeah. So let me remove this here. I made actually good money on this move. Now I also made money on this move. I am not emotionally attached to HT. Hey, this stock gave me money from here to here on a bull trade. I should not short it. That doesn't work in stock market. I should be able to make money up and down. So when you see there is a huge resistance like this, and then don't think like, okay, if you look back, like it went up like this, made a short move, went up, went down. Now it made a good bull move, making a short move like this here. It may go up and go down. I don't know. All we have to do is we have to set the marks here, go to the lowest time frame, like the 10-minute time frame, and then we have to plot the ORB and look for the breakouts, right? So this, in a nutshell, is the supply and demand, or support and resistance, right? So let's look at the next level, steadies. Most important thing, right, for this day is the steady. Well, actually, this is one important thing. Well, all of these are important, but understanding supply and demand is key for the ORB strategy. And understanding supply and demand is key. I repeat, it's key to trade ORB strategy. You cannot simply go out and just plot anything on ORB. It doesn't work. You have to have a breakout setup. And the only way you can understand the breakout setup is if you go back monthlies, weeklies, daily charts, plot supply demand zones, set alerts, then you will get an alert on your mobile. You will know, okay, HT is making a move. So let's look at it. I was looking at Macy's, for example. See, this is all-time high. And then I had an alert, it got triggered. It's on my mobile, but just because it went there and it is going down, I did not leave it. I right-clicked, create an alert, and I set like Macy's all-time high consolidation because it is going sideways. And then it did the same thing. It broke out again. This is all-time high, did this. So see, it's going in steps. That's how they move, the breakouts. Look at this, right? This volume here, this should tell you a story, right? See this from here, you see this volume. This volume is like it came after earnings, but there were 3 earnings before. You never had this kind of earnings. That's telling you a story. It's telling you that this volume right here is gonna make Macy's go higher and higher. If you are a swing trader, you can enter here at 19. You can buy a few months away 30 calls, let's say for a few cents. I can say like for $6 to $10, you will get 30 calls. You can, let's say, buy 1,000 of them. It's 6,000, for example. I can guarantee you that these 32 calls, maybe if I look at it, let's look at Jan, right? These 32 calls are 355. If you invested $6, it's like 355 into 1,000, like 355 into 1,000. I'm poor at math, but you do the math, how much money that is. That is the significance of breakout. Most of the millionaire traders that I have seen got that money in trading, not investing. We are only discussing trading in this session. I'm not touching investing, are with the breakout strategies. Focus on breakouts, try to draw supply demand zones, set alerts. When it is breaking with volume, enter the position. That's it. There is no rocket science here. So that in a nutshell is supply and demand. Now let's look at the steadies, right? So for the steadies, I'll probably go to the smaller time frames and look at steadies. So what are steadies? Basically, if what I have explained you till now is purely volume and price action, right? So what we have gone through right now is purely volume and price action. That alone, only based on volume and price action, you should be making good money. I don't know if you can make significant money, because that's also depending on your risk level and then your psychology and all of that stuff. We are not going to get into that. But then for many people, the volume and price is just not enough. Even for me, I have trouble, right? I have trouble with the volume and price action. I need some additional help. on doing my day-to-day trades, right? For example, let's look at SPY. So I need some help in understanding, what's happening for SPY, what's happening for SPY, right? So let's go to 1 day, 1 minute chart like everyone else will do. So what is a steady is basically you have many steadies on Thinkorswim or TradingView or TrendSpider. And then basically what you have to do is you have to understand what are the key important steadies, and then how do they help you trim your edge using the platforms, right? Like you have to basically go to steadies here. I'm only showing Thinkorswim because this is what I use. I do not use Thinkorswim for my trading. I use Webull, but I use Thinkorswim for my chatting purpose. Okay, so you click on steadies, and this is where you have all the steadies here, and many of them are inbuilt, Thinkorswim provided, and there are many that are custom steadies that we get from outside. And I think I have shared the links in the past where you can find the custom steadies if you're into it. If not, then I will share it again in this chat session. Now let's look at these steadies, right? So I have some key steadies that I thought I would show you guys, and then I will start with moving averages, right? So what is a moving average? Moving average is I will start with this. Moving average is a lagging indicator. What it means is it follows the price. It follows the price. All it does is it only tracks the price. What it means is from here, from 830 to 854, the price has gone from here to here to here. And if I have a moving average, what it means is it basically sums up and it averages the price between this and this, between this point and this point. And we can define what is that point. If you want to see the average of last 10 candles, for example, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. If you want to look at the average price between this candle and this candle, that is called a moving average. It moves along with the price, but there will be a short delay in the price movement of the moving average. Now, there are two types of moving averages. Let me show you what they are. There are two types of moving averages. One is exponential moving average, and one is simple moving average. Most of the traders in the past, like the great traders, all they use is probably a simple moving average, maybe 50 and 200. That's it. They don't have any other steadies. That itself used to be enough for the people back then. But now that we have many, we have to plot, and we need to basically, see all these indicators on our charts. That gives us moral strength, right? But then in all honesty, moving averages are so powerful that all you have to have on your charts are moving average and V-Vap. So what we have to do is we have to understand what is simple and moving. Simple moving average and exponential moving average same, but the only difference is exponential moving average is shows the latest action than the simple moving average in simple terms, right? You can read the definition. I'm not into definitions. I really like looking it live on the charts and basically see what is simple moving average and exponential moving average, right? So let's do that. So I am going to steadies. I'm going to click edit steadies, and then I'm going to type simple moving average, right? So you go to here, it's default 9. That means it's for the last 9 periods. The length is the last 9 periods. So what you can do is like many people use, you use a 20 simple moving average. You leave the color same. I will show you the difference. What is a simple moving average and what is exponential moving average. So that is simple. This is exponential. I'm changing the color so we will know the difference. So yellow is exponential and blue is simple, right? I will go to a bigger time frame so you can see the difference here. If you see, the yellow is exponential moving average, and it reacts quick to the price movement, right? Simple moving average is slow in reacting to the price movement. So if the price is taking a steep dive, exponential moving average will also take a steep dive. But simple moving average takes its time. The way the calculation is made on the simple moving average, it will actually be a slower moving average. And then exponential moving average will actually move quick. Now, why do we have to use a simple moving average and an exponential moving average? It can be used for 1,000 different things. I'm not going to get into any of that. Many people say like, okay, if it touches a 21, 34, 88 or whatever, right, it will bounce. It may bounce, it may not bounce. I've seen equal number of times where it bounced and where it did not bounce. I don't know if it is because it's hitting a particular EMA or SMA line. What is this average telling me, right? So this line here is the sum of the price between last 20 candles. And what is this particular point here telling me on both the lines? It is the average of sum of last 20 candles here, right? So it's just a lagging indicator. It is telling me what happened in the past. It will not tell me what is going to happen in the future. No, nothing does. So this is a lagging indicator, right? So it only calculates the price. It has nothing to do with the volume. And why I am telling that, I'll tell you in the next topic when we come to V-Vap, right? So moving average is nothing but it will average the price on the last few candles, and then it will plot a line here, right? So that's a moving average. Now, how do we use this moving average? Let me take off one of the moving average. I will take the exponential. I'll keep the simple moving average. Let's just say that you are bullish on SPY on this particular day, on Friday. You are bullish on SPY because you looked at this first candle, you liked it, you like the volume, you like this, and then you are going back. It is in a nice trend. You think today it will be bullish, so you will take a call position or you will buy some SPY stocks here. Now, where is your stop loss? Well, some people say like, the previous day high could be your stop loss, or, that could be your price target. I mean, you see all these guys giving the price targets, right? I mean, where is this price target coming from? SPY is at all-time high. What is your price target? What, like 475? Is that a random number out of the blue? No one knows. It can stop at 470. It can go to the 500 same day. Who knows? So the only way for you to go along with the price and not think that, oh, this red candle is here, I will exit. Oh, this red candle is here, I will exit. No, if you would have exited at this red candle, you would have missed this mark, right? So the only way that I use the moving average is for me as a trailing stop loss. What I mean by that is, if I take a bullish position and SPY, and it is going up and up and up and up, I will let the price close below the simple moving average or the exponential moving average. You can use whatever you want. And that tells me that the trend has reversed. Along with understanding the candle patterns, along with understanding volume, it's easy if you have a moving average going along with the price, and then that tells you that, okay, so it has breached this, the candle has closed below, or this candle, I mean, I would have exited here, but if you are really want to be clear, you can exit here. So you're trading all the way from here to here. You're following the trend. Now the trend has reversed. Now the simple moving average is above the price. And then let's say you exited your long position here and you took a short position here. You took a put. And where is my stop loss? Where is my, the high? Well, the previous day high appears to be the low of the day yesterday, but that may or may not be the case. It's good if you draw those levels like previous day high, previous day low. Sometimes they act as support and resistance. Sometimes they may not in such a short time frames. But I happen to have this level yesterday, so I was just looking at it. But usually what I do is, like, if I enter a put position here, I will let the price tell me when the price is reversing, and it reversed here. I entered here, I exited here. Now, the big question in all of us is like, oh, if you would have simply exited here, you would have made more profit. Absolutely true. But how do I know that it is going to come here and do this? It can actually go all the way down. So if I have a moving average tracking the price, I can actually follow the trend. And guess what? Sometimes it will do this. It will go here and it will just break this. You will exit the position. It will come down. That's not in your hand. All you can do is find a system that allows you to grab. If you can grab 60% of the profits on every single trade that you take, you will make really good money. You don't really have to do from the bottom to top. That doesn't work. I don't think there is a system that will allow you to catch the top and bottom. You have to find a system, and if you enter a short position here, just because it's weak, it came under 20 SMA, that could be your edge, and then you will trade it all the way till here, and then you will exit only when it closes above the 20 moving average, right? So many people use one single line, many people use many lines. I personally have used something called, there is a guy called Ripster on Twitter. He's a nice guy. He teaches good stuff. So I don't want to scare you guys with what I've plotted. I'll explain you what I've plotted in a second. So what he says, his theory is that this cloud right here, the top on this cloud is 5 exponential moving average, and the bottom of this cloud is 13 exponential moving average. This is 34, this is 50, this is 72, this is 89. What are these numbers? This is the period that it tracks. So this top one, it covers the last 5 periods. The bottom one, it will cover the last 13 periods. This tracks the last 34. This tracks the last 50. This tracks the last 72. This tracks the last 89. I will give you the study, so don't worry about that. You don't actually need this. You can just plot multiple exponential moving averages. You can leave the 9. You can keep it as 20, change the color, and then you can keep it as 34 or 50, and then you can change the color to white. Many people does that. I don't do that. I'm just showing what not to do in a case. Maybe I should not even show that, but I'll just show it because I know you're going to probably end up doing what I'm doing now. Okay, so many people have many exponential moving averages on their line on their charts, and what they do is like, okay, so it has crossed the first 9. Maybe I will wait for the 20. It will cross 20. And then they'll be like, okay, so I'm almost close to my entry position, so I will wait. This is 50. 50 is like one of the greatest moving averages, right? So I will wait for the 50, right? If it crosses the 50, then then I will exit my position, and they will let the price cross the 50, and then they will say like, okay, 100 is the end. If it crosses 100, I will cut my position, and then they will just watch it go down, and then it never comes up. So you went from a winning trade to a losing trade if you have multiple things. Now how it works is on a longer time frame, it may work a little. If I go to the yearly time frame, it may work a little for you to assess the situation on, okay, so what's happening. On a longer term, is it going on a good trend, or are there any major drawdowns, things of that nature. But if you're looking at a 5-minute chart, or anything like 3-minute chart, or even 10-minute chart, it's really not a good thing to do. Like having multiple EMAs is not a good thing. Now, what this guy Ripster tells is like the cloud means the strength of the trend. I will share this in the chat here in a minute. But what he says is like, see, if the price is on top of the cloud, it will take the support and it will just fly in the cloud like like an airplane. Which I respect him what he's saying. And look at Lucid, for example, yesterday, right? So it started here. I noticed a high volume. I got some alert on one of my scanner, and then I noticed it. So it went up, it came down, but look, it took it touched this 3450 cloud, and then it is going up, and it closed higher yesterday, right? So you can use these clouds as your own way of tuning your mind, and to stay in the trade, right? Like many people would have got exited out of the trade right here, right? For example. But if you would have stayed till here, it would have gone up there. But the problem is you never know if it's gonna, bounce here or it's gonna go down. It can happen either way. So only God knows what's gonna happen, right? So this is just to diffuse yourself and help you stay in the trade. This is called an exponential moving average cloud. It's also called as a Ripster cloud. He's actually, it's an interesting story. This guy Ripster is just like us, most of us. He came here to US on a H1 visa. Now sometimes he makes 5 to 6 million on every single day, in every single trading day. He's a legit guy. Like there are many fake gurus out there. He's not a guru. He doesn't charge a penny out of anyone. He just explains. He just teaches stuff. If you guys know him, you already probably know, like he's a good guy. So he's on Twitter and somewhere else. But he is just like us. And then all he does is breakouts. He will find the supply demand zones. He will use these clouds. He will do the ORB. He will trade. He made a gain. Shivala Party. What is the person name again? His name is Ripster. I think his Twitter feed is Ripster47. So I personally don't know him. So don't think I'm giving any promotion to him. He's a nice guy. I mean, we have to admit the fact. He teaches stuff. Most of the stuff that I've learned, some of the stuff on the exponential moving averages came from him, and the breakouts came from him. Anyway, so this is a cloud, and you can basically plot it. And I personally try to use exponential moving average more than a simple moving average. So let's look at that. So that covers the moving averages. So let's remove the moving averages. So you guys get the concept of moving average. It simply tracks the price. It doesn't do anything. It just follows the price, and then you can use it as a trailing stop loss when you're trading, right? So that's in a nutshell what's a moving average. And then there are many videos out there. You're good to go watch them. But then out of all these things that we're going to go through today, there is no holy grail. No one indicator here can get us millions. It's a combination of all, and many hours of screen time will get you where you want to. Let's look at another popular study here that's called RSI. It's a custom built-in study that's there on Thinkorswim. And by the way, like I just want to tell one more thing. I saw one of the names when I joined Thinkorswim a year and a half back, or three months back. One of the guys in our group, his name is Judoka. I don't think he's around. But then that guy actually helped me to learn all the stuff that I'm explaining you guys. It actually came from an account within ThinkSavio. And that's the reason why I'm trying to explain you guys. This is kind of a give back to the community, because if I did not join ThinkSavio, I would have not met Judoka. If I would have not met Judoka, I would have not been knowing any of the things that I'm explaining you right now. And there are many more things that I've learned, but it's all because I joined ThinkSavio and I met that guy. So I just want to let you, I don't think he's here, but I just want to thank him for all the knowledge he shared me. Anyway, so let's get back to RSI. What does RSI mean? RSI is nothing. I have this definition, the textbook definition. I'm not good at definitions. Relative strength index, what it does is basically tells if the stock is overbought or oversold. That's what the indicator does. RSI, what it does is it basically shows the strength of the particular stock. right? So if you plot RSI on your Thinkorswim, what it shows is like, if you're looking at Lucid, or let's go back to SPY, right? So what is RSI telling you? If it goes above 70, that means it is overbought. If it goes above this, that means it's overbought. If it goes here, that means it's oversold. Now, I don't know how many of you have been trading SPY yesterday, but let's assume that you are trading SPY yesterday. Isn't this the most easiest thing to do? When it touched here, see how it bounced up? You would have bought something here, a call here, and sold here. When it went here, like when it is overbought zone, you would have shorted it here, and then you would have exited here. Well, it worked on Friday, but trust me, it will not work on every single day. But it is a good way, if it is a good gauge to see how the market is behaving and how good the stock is overbought or oversold, right? It probably works on stocks that are not so volatile, but it's not good for stocks that are really volatile. And the reason for that is the RSI, if it is up, it doesn't mean it will go down. If it is down, it doesn't mean it will go up. The problem is it can actually go sideways like this. What that means is SPY can stay here, and then it can go up, because you think that there is only 100 points. You can think like, okay, as soon as it hits 100, I'll go short. No, what it does is it actually goes sideways in the RSI here, in the upper band, and it will go up and up and up. So let's say, I think Disney made a good run here. See here, because it crossed RSI, if you would have gone short, you would have done a great mistake for your portfolio, right? So it went up and up and up and up here. See how it stayed up and traded sideways, like moved sideways here. RSI itself is not it's not a holy grail, but it can really tell you if it's a overbought or oversold, right? It will give you a good gauge. And then again, the bigger the time frame, the better. Not Disney, but I want to go to SPY, right? Okay, so you can see here that the SPY is, can we check if Python is oversold yesterday? Yeah, we can check that. As a matter of fact, you can check that. That's the whole intention of this thing, for you to be able to check, but we'll get to Python in a second. So here, see the RSI, it's showing it's overbought. And the point is that it can actually go overbought and stay there for some time, right? But then it will give you a good gauge of whether a stock is overbought or oversold. And many fund managers and many people use RSI to get a gauge and to get a feel of how the market is doing. Now, someone want to look at Python, we can definitely do that and see. Yesterday, I really don't like 1 minute, but okay. So what is the RSI telling me? So the RSI is oversold, and then it's basically a trade like going sideways on a 10-minute. It's close to the oversold, so I would assume that it would probably be on a lower side like it is here. You can take any example, like let's look at Macy's. I don't know. See, it's kind of trading sideways, right? And if there is a momentum stock that just went up yesterday, ABMB, right? So it went up. So to look at the RSI, just stick to the upper band here, and then trade it sideways. But the stock actually went up the more ABNB. So someone want mRNA, we can look at mRNA. So you can see it actually, yeah. So mRNA is a good example. So it just went down, 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 and then you can see RSI is just under oversold for a long time. Many people think if RSI is oversold, it will bounce up. That's false. I'm trying to help you guys to clear out some of the false theories out there, because there are many false theories out there on these things. There are many videos that say, like, they'll have this thumbnail that says like RSI, the only indicator you ever have to learn. Don't click that. It's a clickbait. It's not the only indicator you ever have to know. No, Doesn't work. It works if you mix it with something else, but it's not the only indicator. Okay, so see, mRNA, it went down, it stayed under for a long time, and then it reversed. I mean, you can know from RSI that it is going up, but you can also look at the price chart. It's also going up. So do you really want RSI, or do you just want this, right? But it really helps when you look at, the larger time frames, right? Like it's oversold at this point. It doesn't mean it will not go down. It may just, trade sideways. But to get you a gauge that, it's at oversold. Here, look, it's overbought at this point, right? Here, it's overbought, and it's been overbought for quite some time. Finally, when it came down. Now, if you're a swing trader, you can use RSI on a daily chart, and then you can say like, okay, so there is this candle with huge volume here, with huge volume. Like, look at this volume here. Is there anything that's touching this other than this one line here for the last maybe many months? No, see the huge candle. What does that tell you guys? It tells you that there is a downtrend that has started, and RSI tells you the same thing. See, it dropped. And then from here, if you're a swing trader, you can basically go short here, and then you can hold it till here. If your stop would have not got triggered somewhere here, right? So RSI is useful. I personally like to see RSI on a daily time frame rather than on like the intraday charts, like 1 minute or 10 minute or 5 minutes, right? So try to go back and look at the bigger charts and then look at RSI. That's probably helpful. So this kind of gives you a gauge of whether a stock is overbought or oversold. So that's one study that I want to touch on. There are many studies, guys. I mean, if you look at it, you see there are many custom studies I have that you don't really find anywhere. So I've seen them. Most of them work. Some of them doesn't work. No, so most of them doesn't work. Some of them work. It put me that way. So what's the next topic? So we are looking at RSI, the V-Vap. Okay, we are coming close, which is good. So V-Vap. Let me tell you V-Vap, plot V-Vap here, and then maybe show when there is a lot of dark polarity, charts will not reflect the truth. Is that true? Example, clove. I think that's true when there is dark pool activity. So let's look at V-Vap. So V-Vap.
Vishwa, Deviate, thank you for your time. Yeah, I know you're covering one by one. See if you can cover the rest with just the example you think, and then question and answer we'll cover later. Okay, rather than taking everyone. I like to see some charts, so everyone has their own, but not to undermine their request. But yeah, just in interest of time, I'm getting some requests, so just a note.
Yeah, that's fine. Yeah, so we will look at V-Vap, and then we will probably look at ORB, and we will go for questions. Is that okay, Danu, or is that like we want to go for questions?
No, that's perfect. No, that's perfect. With the example, one example is fine. We have to do our own lot of research to be able to master it, which we all know. So all we need to know is, oh, these are the concepts. This is what existing. This is what it is. Then it's self-study after that. So that's keep going. Deviate. You're doing as we need. Thank you.
Okay, thank you. So let's look at this. All right, so the white line here, it's the V-Vap. What is V-Vap? V-Vap is volume weighted average price. What moving average calculates, what tracks is it just tracks the price. It does not track the volume. What V-Vap does is it basically tracks the volume and then the average price both together. Now, under steadies, apart from supply demand and the candlestick patterns and knowing what is doing what, under steadies, ORB is not a steady, it's basically a theory. Standard deviations is good, but we will get into it. Under steadies, out of all the studies that we have on the Thinkorswim platform or any platform, if there is one single indicator that you ask me that I cannot trade without, that is V-Vap. VWAP is the only one powerful indicator that I like. It's not holy grail again. That's one single indicator that I personally like for myself. So let's look at what VWAP is doing here. Okay. So what it does is basically, let's go and see an example or the definition, the textbook definition, if someone is interested. Basically, what VWAP does is it basically tracks the price and volume. And like you see here, large institutional buyers and mutual funds use VWAP ratio to help move into out of stocks on any particular day. Like if you guys remember what I told is like, if for example, one hedge fund want to buy a stock, they'll not be able to buy it on one single day. They will probably have to buy it on many, many days. And every single day they will come and then they will buy when the stock is close to VWAP, or when they want to sell, they will sell the stock when it is close to VWAP. They will buy, I'll repeat it, all the institutions, most of the institutions, most of the money managers, they will buy or sell the stock at the VWAP. This is the most important indicator. Why is it important? Because many people are using this. Large money, big money is using this. So you can basically stay with them and go in the flow, go with the flow. So let's take Moderna, for example. It's been on downtrend for many, many days. And you know, you want to short it, right? And you don't know where you want to short it. Simple rule. If you have Moderna on your chart, wait for the price to touch VWAP and see how the next price action is behaving. If it is going down or up, for example, if it is cutting VWAP and going up, that means there is strength. Don't short it. If it is cutting the VWAP and then wait for the next candle and see if it is going downtrend, short the hell out of it. It's okay. You set your stop loss here, right? So you can set your stop loss here, somewhere here. And then if price crosses this point, you're out, or you can move this to somewhere else. You can set your stop loss somewhere here, or wherever you like. But the point is that you are not alone when you are trading VWAP. That's the point. So if the price is going up, touching the VWAP, if it is going down here, that means you will follow the big institutions. The big institutions are trying to short the stock at this place. They're not trying to short it here. They're not doing it here. They're not doing it here. This is retail, or maybe some guys. The main action is at VWAP. And then you can have this exponential moving average. And then you can trade it all the way till here. See, this is an edge right here. Many people actually simply trade with these two lines. I mean, they don't look at anything. Well, they will look at the big charts. That's how they pick the Moderna, right? But then all they will have is just these two lines. They'll just wait. They'll just wait all the way for it to come here. If it doesn't come till here, it will just go here. They may not take a trade. They will only take a trade if a price retracts back to the VWAP and goes down. And then they will have an exponential moving average following the trend, right? So VWAP is very important. And then I'll go with one more chart for VWAP, and then maybe a couple of more charts for VWAP, and then we will see how it is working. All right, so Lucid here. So it came down, it went up. It came all the way to VWAP. It went up. You can just have this exponential moving average here, and then you would have created this. Now, I randomly pulled Lucid. I was not looking at Lucid and VWAP yesterday. So if you look at Disney, how come it went all the way up, for example, all the way up and have a massive drawdown, and then exactly at around VWAP, it's going up? Because there is some buying that's here, right? The VWAP. So this is VWAP, and I cannot stress enough. VWAP is single most valuable indicator. If there is any indicator out there that's that's kind of mixing price and volume. That's VWAP. So that's why many people use VWAP to buy and sell, and then use it as a stop loss. So you can use that VWAP and then exponential average as combination, and then you can basically trade and have an edge like that, right? And then I'm going to remove all of them, and then I'm going to show one last thing, standard deviation channel. And if you're thinking where did my name come from, deviate standard, that's because of these standard deviation channels, and I'll tell you why it is so important in a second here. So the theory is that, let me show you what is the theory here. Here. So this is a standard deviation, basically. What standard deviation is that, like 68% of the data will fall under one standard deviation. This is one standard -1, this is +1. So 68% of the data, be it any data, be it, the people, who have white hair, or people between this and this age, and people between, with this, or the number of houses that have basement or whatever, right? Generally, in general, this is statistics. The data will fall between one standard deviation, and then majority of it will fall, I think around 70 or something percent falls under here. And then 98 point something of the data falls under the third standard deviation, and almost 99.999% falls under fourth standard deviation, right? So this is the standard deviation curve. This is statistics. This is not something that we have created for stock market. However, this theory also appears to be working for the stock market in some cases. So if I go back to SPY, and if I basically look at this chart, so if you look yesterday, right, like the price went up, price went up, price went up. Where did the price kind of reject? You see, this is a 2 standard deviation here and here, right? If you go to studies, you can add this standard deviation channel here, right? So what it does is basically it gives you the mean. This is the mean. This is the average of the price for the last 1 day, and then you have 2 standard deviation here. You can add 1 standard deviation, you can have 3, you can have 4. I have a big window of all standard deviations. Now the point is that if you are not aware where the price might hit and reverse, you can have the standard deviations as a gauging, and then the price, as you can see, actually hit the 2 standard deviation, could not break it with volume, and then slowly came down, and then almost reached the second standard deviation and traded at mean for the day. So if you go back and like always, if you go back and look at the bigger time frames, the stock will try to trade along the mean, but then if this is 1 year 1 day time frame, I changed it from 1 day 1 minute to 1 year 1 day. So this chart is 1 year 1 day. So if it goes down, it will try to come back to the mean. If it goes up, it will try to come back to the mean. You would have heard about mean reversion strategies. What it means is if it is deviating from the mean, it will have to come back to the mean at any given point, right? Like if you look at Moderna, right? So it went up all the way to the second standard deviation. It went down, and then there's a slight chance that at 170 range somewhere here it may just turn around and maybe trade around 386 range on a long term. The mean is nothing but an average trade value within this period. It will basically sum up all the values, all the trading days. And then this is a fair amount. This is a fair price for Moderna, 386. That's the fair price. Not 497. That's why it came down. Not 233. That's why a few weeks from now it will go up and it will trade at mean. So if you are trying to, let's say, buy a stock or short something, right? You can go back here and see what is the average price of Moderna in the last 1 year. And then you will get an understanding where the stock is trading. Is it trading way above the range or it's trading way below the range? right? So let's look at Apple, for example, right? So Apple almost tries to stay near the mean. Even if it deviates, it will just, come to mean. And then I'll look at Tesla for 1 second. So Tesla has breached, it has been close to the mean, but then, you can see it broke off. It just crossed the 2 standard deviation. And then if you're wondering what standard deviation it is at, it is probably at the 4th standard deviation now. So yeah, I'll just keep the same color. It's probably going close to the 4th standard deviation. And maybe once it goes around that range, that's probably when you can think that it has reached to its potential. And then when many of these hedge funds and the money managers give the price target, they go by the mean here. So you see someone will be like saying like my price target for Tesla is like 800. That's because they're just looking at the mean. They don't do much calculations. Like they just go by the mean. And they say like, okay, the mean price is 807 today. So today for me, the price target is 807, right? It was trading at 807 few days back, right? It just went ballistic because it had a breakout. So that is a standard deviation. It just helps you get a gauge of where is the stock trading with respect to its average price, right? You can look at any chart, right? It will show you. Most of the stocks try to trade around the mean, but then there are some volatile stocks, right? Let's look at SI. I think it had a good run, right? So see, it's trying to deviate from here and trying to go there to 2 standard deviation. And then if it goes up, it can go till 300, which is the 4th standard deviation, right? It's a fascinating concept. I can go on and on and on about standard deviation for many hours, but I would not. I personally like to see this to get a gauge of where the stock is. Is it overextended, or is it over, sold? Along with RSI, I'll just like looking at standard deviations to see where is the price. And if some stock is hitting above 300, it's not fundamentally good. Not above 300, above 4th standard deviation. If it is not fundamentally good, I may start my starter shorting position at that point, right? Because if it is breaching 4th standard deviation, that means like it has gone beyond its extension. So not for fundamentally good stocks. If we should not do that. So that's about the standard deviations here. And the last concept here we have to the schedule is ORB, and let me cover that. And then ORB, then 10, I think this is what I've been using. And then let me go back to 1 day, 5 minutes, for example, right? So ORB is pretty simple. And let me adjust this a little here. Okay. So ORB is pretty simple, right? So the time that I have in my studies for this ORB is 9:30 to 9:45. This is like the first 15 minutes. ORB, that means like it basically plots a high, a low, based on the first 15 minutes price action of a stock, right? So let's say we are looking at SPY, and then this is the first 15 minutes. So is the first 15, the thick line here is the first 15-minute high, the thick red line here is the first 15-minute low of the day, that when it started, right? So what I try to do here is like I will basically plot this at the 30 minutes, not at 9:45 usually, but I will change it from 9:45 to 1000. That means it's 10 o'clock. Then I have these automatically plotting on my screen. And what I do is, if SPY, the body of the candle crosses this upper line here, I will buy a call. And then if immediately it drops below, I will stop my position, right? If the body of the candle here, if this candle closes under this, I will buy a put on this at the beginning of this candle, and I will ride all the way here, and then I'll use exponential moving averages to basically manage my trade, right? I'll use 13, I'll use 21, I will use 34 based on the stock that I'm using, because each stock may not respect based on the volatility. I will just change my moving average, right? Opening range breakout is by far the most easiest trading strategy, right? It's pretty simple, right? Like I'll take one more, right? Modern in the morning. So what I will do is for modern, I will basically enter a short position here. I'll buy a put here, and then based on my 20 exponential moving average, I think this is where I will exit, right? So or you can use these fib levels. The Fibonacci levels, Fibonacci numbers are nothing but like, those are the numbers that the nature follows, is what they say. Like, you know, I think some flowers have the number of petals that follow the Fibonacci series, and the river flow is in a Fibonacci series, and you know, there are things of that nature that uses Fibonacci. So these price targets here are the Fibonacci retracement from the mean of the opening range high and low. So you can basically use these dotted lines as your price targets. And then if you want to lock your profits at here, you can do that. If you want to wait till here, you can do that. But if you would have waited till here, it would have reversed. And then when it reverses, you can actually lock your profits here as well. So that is one way of how I use ORB, right? Like simple, pretty straight, very easy. You plot this indicator. I think I've shared it in the group many times. And then all you have to do is let the price break this level and then wait for it and closely monitor. If the candle closes above this line, that means you will have to close your position. You will have to take a minor loss and move on to another stock. But in this case, Modern, I did not. So you would have shorted it all the way from 223 till, if you are, you know, exactly closing at this point, that's like around $13 move from here to here. So that's ORB in a nutshell. We can just look at Lucid, for example. Yesterday, when I was looking at Lucid, I noticed first there is huge volume here, and it's breaking out the ORB. I took a position, and then I ride it all the way to here. And what I thought was once it breaches 41, Lucid will just go ballistic. But then I think it crossed it at the end of the day, but still it managed to hit 42.43. So we can look at Disney, for example, and then it broke here. And then, you know, this is where you enter the trade. You can keep these Fibonacci levels as your stop losses. And then you can either lock some profits here, some profits here, some profits here, some profits here. And if it reverses at any point, you can lock it at the next line, right? So how you use it is up to you. How do you lock the profits is up to you, right? So I like to use, I do not enter a trade usually until the first 30 minutes. If I'm using the ORB 30, sometimes I tweak it around based on my trading style. I also try to change it from 9:30 to 10 o'clock to 9:35. What that means is I will be basically having my range starting. Can you guys hear me?
Yes.
I had to change my AirPod. Its battery is draining. Okay. So I will change it from 30 minutes to 5 minutes. That means this is the high and low of the first 5 minutes. And if it breaks the first 5 minutes, I will enter the position. Now I have a bigger return because I'm entering at the very early stage. But I have to know the stock because there will be many fake breakouts, many fake breakouts. The success rate of ORB strategy is very low, but the profit potential is very high. So what it is like you have to be very cautious when it crosses your stop loss. This is your stop loss. If you're shorting, this is your stop loss. One candle close below, you have to close. right? And then you can write it as however you like. You can use a moving average. I use moving averages. You can use these fib levels. What I've been doing of late is I can actually show you my setup, and then I will stop there because that ends our topics for today. So what I'm doing of late is I'm taking all the fib levels. I'm removing the fib levels. And so all I have is ORB, right? And then I just have an exponential moving average, right? Sometimes I do exponential, sometimes I just go with some other thing, right? Okay, so I have an exponential moving average. What it means is I would have entered my trade here, here or here. I would have traded all the way up here, and then I would exit here. I will not let it come here, touch the V-Vap. Nope, I did not do that. This is what I did. Now, the other interesting thing I wanted to show you guys is what I've been doing off late. Is this. I'm removing all the fib extensions, and I'll show you what I'm doing. So what I'm plotting is I'm doing the open range breakout from at 9:35 Eastern or 8:35 Central. And then I'm plotting another ORB. It's like an ORB combo. And then what I'm doing is for some of these, I'm actually trading from here to here. I'm just trading the high of the 5-minute to the high of the 30 minutes. That's it. I'm just leaving everything else to, I don't care. So that's something that I'm doing as a strategy. And then it seems like I'm having more profit, like the hit ratio of this strategy appears to be more good for me. If some stock is breaching its opening range 5 minutes, it's almost always sure that it's touching it's making a good 30-minute high. And then from here, many of them will break down because many big guys, day traders, they will use 30 minutes ORB strategy. So they will wait for the first 30 minutes. And then they will actually do the reverse play where they will short the stock at this position. So that's also one theory, right? So what I noticed is this is a good move from here to here. So I'll just capture that small move and I'll just move on. I'll just move to a different stock. And then see if, and then at that point, I'll just trade this one on a different stock, right? So so in this condition, the first 5 minutes and the first 30 minutes is the same, right? You only see one line here at the high, but then this is the first 5 minutes low. This is the first 30 minutes low, right? So you have different levels. And then that also helps you gauge how the market is going, right? And then this is the first 5-minute low. This is the first 30-minute low. You can also trade from here to here. Like this is my price target, right? This is the first 5-minute high. This is the first 30-minute high, right? So you can trade like that. And the key here is to have the right stocks on your watch list. And the only way that you can have the right stocks on your watch list is by going back and looking at the yearly, weekly, and monthly charts, right? And then the way that I scan this thing is that I have many, like you can see all my scanners, all these scanners that I've built. Some of them I've built, some of them I just took it from the web, like Google. There are many things script pages that I just pull it, right? So the one that I think I've been using, let me see where this is. Where is this? So morning 103, let's see if this has, so this is the relative scan that I've been using. Let me find my opening range breakout, unusual volume V6, I guess this is the one that I'm using. So I'm scanning for stocks that has an opening, right? This is a scanner that I gave to everyone, right? So when the bar crosses the opening range high, or the bar crosses the opening range low within the last 2 bars, and then I'm also adding a volume because this is price, right? Price is good, all good. So what I also adding is like there is another steady here, like unusual volume. And then I just selected what the volume increased at least 60% from the typical average of last 20 periods on 3-minute candle, right? If there is a spike in volume by 60% in the from the last 23-minute candles, then I will get an alert on my phone, and I will look at that stock, right? And then I have like I showed, like I have many scanners. So how do you do the scanner is like you go to this scan page, and then add a filter, and then click steady, and then go to custom, and that went to a different screen. I think, let me see where that went. Okay, it is here. So let me bring it here, and then so you delete this, then you add a condition, and then you can select the condition. But then for this ORB scanner, I gave you guys the script. So all you can do is click here, and then what it does is, I'll show you what it does. So I gave you the script directly, so you don't have to go through any of it. So all you have to do is this, so the name of your ORB scanner, you have to, let's say you're doing it brand new, right? You don't have anything. So you go to scan, you click on add filter, you click on steady, right? Then some default will come, you click here, go to custom, or you can directly click this here. And then you pull this here, and then you delete whatever is there, add a condition, sorry, go to think script editor, and then paste this. So this right here is my ORB steady, but you have to give the name of your ORB steady if you already have one, right? So give your ORB steady here, give your ORB steady here, right? And then click OK. And then change the time frame to whichever time frame you want, right? 5 minutes. So do you want the 5-minute candle to cross the opening range high, and then show you the results? If you scan, it will basically show you the results based on what you have, right? If you want to add the volume, all you have to do here, add filter, click steady, and then you can go to volume. You have unusual volume. The current bar should be the 5-minute bar. The current 5-minute bar increased at least 50%, for example, from its typical average 20 periods, right? And then all you have to do is go here, click save, give it a name, test, and then save it, right? So now what I do is I try to scan it in my watch list. I have many watch lists, guys. So you have to pick your own watch list based on your research, what stocks are breaking, right? So I try to run it on the stocks, top S&P 30 stocks. And I have, few stocks that I've manually added. But these are the top S&P 30 stocks in S&P 500. I don't care about what's happening outside of these and few other stocks that I personally like. I don't just randomly like going out and picking some stocks. I have a list. I'll run the scan. I did not get anything. What did it say? No matching symbols. So no trade. As simple as that. If there is a scan, if there is a symbol, then I'll get an alert, right? So how do we set an alert? I don't want to scan it every day. So you go here, and then here you click alert when scan results change, right? And you can say like ORB breakout, right? And then you can go here, and then you can say like send email, send text message, and just send push messages. If you have a Thinkorswim app on your phone, you can just enable this, and then whenever a symbol is added, you will get a notification on your phone or email, and your Thinkorswim platform will also ring a bell. So this is how you set an alert, and this is how you set an opening range high, low breach along with unusual volume. You can remove unusual volume if you're not worried about it, but I personally like price and volume. Price and volume. These are the only two leading indicators. So that's what I focus on. So with that said, so we covered ORB theory, we covered scanner on how to do ORB. You can have any scanner. Let me touch something outside of. You can use this scanner for anything for that matter. Like you can have this scanner and you can say like, okay, so you want a stock that's minimum $50, and then you can add, and the steady you want to see like crossover. There are many things, Bollinger, MACD, momentum. I mean, TTM is a very, very good thing. If at all we get a chance to do another session, I will cover a few other indicators like TTM squeeze, and there are a few nice indicators we can go through. So you can basically see there is a standard deviation channel, right? If a stock is above this, and if it's crossing 2 standard deviation, notify me. You can do that. If a stock has a IV change, implied volatility change, alert me. You can do that, right? If a stock volume is so and so and it has change, you can do that. I mean, if a stock is having earnings, let me know. You can do that. Candlestick patterns, dojis, aramis, you can do all this stuff, right? But what you cannot do with this is like you cannot find the breakouts without you manually going through every single chart and looking, right? So scan option here on thinkorswim is pretty important and pretty neat. I would highly encourage you guys to go through all these options here and then look at all these options, how they're going to work, right? So that's the scanner here. I would exclude all OTC if I'm scanning on all the stocks because I don't like noise. And I will also intersect them with all optionable because I am an options trader. I do not trade stocks. I may have some long positions on stocks, but I am purely 100% options trader. So that I think concludes our topics that we have. And let me see if there are any questions. Danu, I'll let you tell me what to do from here. Do we want to take up questions, or the questions being answered, or what do we do?
Yeah, thank you, Deviate. I will have to see. I'll switch my audio from laptop to phone. I'll have to see how we can handle from here. Let me see the participants. Yeah, anybody has any question? Do you mind to raise your hand? We'll test on one. Okay, Shashi raised it. So in the interest of time, everybody, I mean, Deviate has his own things too. Let's do 30-minute session for question and answer. Beyond that, no disrespect to anyone, but we will have to end it. Okay. Shashi raised his hand first. Let me see if I can allow him. Yeah, I switched my audio, so looks like it has some problems. Let me see. Yeah, I can do from phone itself. Yeah, Shashi, go ahead.
Hey, thanks for taking my question. So, Mike, thanks for all the wonderful sessions. This is really amazing and very detailed and went into the basics. Thank you for that. One quick question is what I'm struggling with whenever I do options, right? When the breakout happens, I see option prices are jacked up really, really high. And by the time you get into the trade and you try to hit the stop loss, you're not really making a lot of money. So do you have any special recipe that you follow how to get into the trade early so that you're getting max profit out of the trade?
So to answer your question, if you're trading a break and if you want the best price, let's take this, and I'm looking at a 5-minute chart here, right? And I'll plot my favorite indicator here. I'll show you what I'm talking about here in a second. So I'm removing the upper band, I'm removing the lower band, the V-Vap. I'll increase the width. This is my setup. If you want the best price for the day, you will have to wait for the break, and you will have to wait for a V-Vap retest. Will that happen all the time? It will not, but you will get the best price. if you actually go back to the Lucid option contracts, even though this price did not come all the way down here, you will get the best price. From here, if you buy it as close as you can to the V-Vap, then you will get the best value for your buck. I can assure you that.
Okay, so you always wait for the breakout, and after the breakout happens, you wait for the price to rotate back to V-Vap.
I do not do that. I'm telling, I enter here.
Okay, okay. That's
enter here
today, and sometimes when you have to exit, you don't really make any. Okay, got it.
Well, you make it. I mean, it went from,
Yeah.
I think my contracts, I think they went from, I don't know, I think maybe from 24 per contract all the way to somewhere 80s or something, like massive returns, like
Okay.
yeah, 300-400%. So yeah, it does go up.
You don't exit until it hits until it crosses down the simple moving average, right?
Simple or exponential. I mean, I don't know what this could be a 21, but I don't use 21 for a stock like Lucid. I mean, it will just fluctuate, right? I'll probably go to 34 or I don't know what, I don't remember what I use, maybe 50, right? So I don't use a small, simple moving or exponential moving average for a volatile stock like Lucid. But if I'm trading Bank of America, I will probably trade it with 21 easily or 34.
Okay. So what's
not volatile?
What are the typical exponential or simple moving averages you suggest for a volatile or a non-volatile stocks?
For a volatile stock, you can go like 50 exponential. But then you will also have to make yourself ready that there is a chance that you may not make anything or you may minor loss.
Yeah.
Right. So when you're getting into volatile stock, always remember that it's all or nothing kind of thing. I mean, that's kind of a gambling word that I use, but it's true that you either get it or you don't for a volatile stock. But for a stock like Bank of America or Macy's or KHC, I mean, there are many stocks like Intel Corp, you can just set it 21 and then just let it ride the momentum. I wouldn't even do 34 here. I would probably do it at 21 or 13. So maybe 21. Yeah, here for Bank of America, it's 21. For some of them, I use 13, 1, 3, but not on 5 minutes. I use 10 minutes charts and then I use 13 moving average.
Okay.
Right. So you can also mix and match with the time frame and the exponential moving average.
So I have one last question. So how many stocks do you focus on? Because another biggest challenge would be you can't really focus on more than based on your personal ability, right? How do you manage that, and how many you try to trade every day if you want to really do intraday trading?
Good question. So here is my watch list. You see this day trade now here, my watch list. I will try to have six here, like 6 to 8. And SPY, Bank of America, UVXY will always be there. So I have a room for 5 more here. And then I have this watch list thing here where if a ORB is crossing, I don't do it. I don't look at the charts. I look at this and my phone. And I'll do my work. And when I see anything breaking out, I'll just, get this signal here. Like if the ORB, if the stock is below the ORB, if it is above the ORB, I'll just get the signal here. And then if it changes the color, I will just open the chart and just take the trade.
You trade both above and below?
I trade both. I trade above is calls, below is puts. I trade both. For example, if you look at UVXY, look at this massive run it had yesterday. So it went from here all the way to here. See, this moving average is what I would have used. I would have exited here.
Okay. Okay.
You will not be able to catch the top, trust me. So you have to adjust with some, at least like 50-60% of the total profits.
Exactly. Yeah. You got to be lucky to catch the top.
Yeah.
Okay. Thank you. Really appreciate it.
No worries. Thanks.
Yeah. Damu. Okay. Looks like Yeah. So any other questions, guys? You have to raise your hand if so. And also, just a request, there are many people, they want their questions also answered. So just keep that in mind and keep our conversation short, please. Just a reminder. Kishore Raju.
Hi, sir. Like it's the session is really good. I never did technical analysis and this day trading, but it's very interesting. What do you suggest? Do you have to spend a lot of time learning all these things? And what is the best way to learn these things? Like how much time frame, and then like what is the sources that I can use to get up to speed on this one?
Yeah, so it's going to take time for sure, and depends from person to person how much time and how quickly you can grasp. But then what I would suggest you is like if you're just talking about day trading in general, like you can look at these concepts online, the ones that I've explained them. You can start with these, like just understand what are candlesticks, all these things in this order. And then while you're going through this on YouTube, like there are many great channels, man. I mean, I don't know, I would have subscribed to like thousands of channels. And then yeah, you have to spend hours and hours and hours. When you're driving, you have to listen to strategies, stocks. What does I do it even today? Even today, when I'm going out to get my car for service, I listen to stocks. You have to listen to stocks. You have to keep watching videos. You have to spend hours and hours and hours on charts. If this is not your thing, that's fine. You don't have to force yourself. I just got fascinated by stocks. I mean, like how someone likes cricket, and they will just, if there is a match, then we'll just stick to the TV. We cannot do anything else. That's their passion. That's their fascination. I just got fascinated to stocks, and I have not got so much fascinated by anything in my life. So I'm just spending my whole time for this because I just like it. So it takes hours, 15 hours, 16 hours, 20 hours. You just have to look at the screen, charts, whatever you're learning. You have to apply it, see, back test it. There's a wonderful feature on Thinkorswim. You can do paper trading, just learn everything. And before you do, the word of caution for everyone is that I have on my here is like paper trade before you do implement any of these with your real money. And I thought I'll actually say paper trade for 3 minutes straight. Paper trade these strategies, or any strategy for that matter, before you put your real money. You can make money tomorrow, day after tomorrow, 10 years from now in stock market. It's not going anywhere. But for you to master, to even break even, just paper trade, right? So this is my word of caution: paper trade, paper trade. So resources is online, man. I mean, I don't know, like YouTube channels. There are many nice guys. If you want to start with options, there is this Tasty Trade thing. Tasty Trade channel is a very great channel. You can learn options there. In the Money is a great channel where he will explain a lot of indicators. There are many YouTube channels. You start with one, they will keep pumping you all these videos. You just start watching one video. You don't have to search for anything. They will just give you the recommendation to watch this, watch that. So yeah.
You said one is In the Money. What is the second one you said, sir?
In the Money and Tasty Trade.
Tasty Trade.
Yeah, start with them.
Okay.
Thank you.
Thank you. Yeah, that's all from my side.
Damu.
Hello?
Yeah, we can hear you. Go ahead, please.
Oh, hi, sir. Today I learned something good, but the thing is, I just wanted to know which, like we have covered so many today, right? Like ORB, V-Vap, and moving average exponential. What are the two, means as a layman, I'm asking you, what are the two best indicators to follow?
V-Vap. ORB is not an indicator. ORB is a strategy.
Okay.
V-Vap. If you want to spend your next 100 hours on anything, in mastering anything, master it on V-Vap.
Okay. And is this some special tool? Is this one? Or
Which
is
one?
it TD Ameritrade?
This is Thinkorswim platform. Backend is TD Ameritrade. The broker is TD Ameritrade, but the front end is Thinkorswim.
Okay, can we have the same thing even in Webull?
No, I don't think Thinkorswim integrates with Webull. You can just open an account. I mean, just open a TD Ameritrade account for free, and then you can use Thinkorswim. I mean, V-Vap is there on Webull. V-Vap is there on Robinhood, I think. Webull, Robinhood, any platform you take, there is V-Vap. But I don't know if you have these ORBs, this and that. So you may have to, use Thinkorswim or TradingView, TrendSpider for these things, for the ORB, like the custom indicators.
Okay, can we apply even the scanners in Webull?
Webull, I think you can scan, yeah, but I only use Webull to buy and sell because it allows me to buy in the morning 4 o'clock and
Yeah.
But I don't use Webull for scanning anything. I just use Thinkorswim.
I don't have a TTD account. Yeah.
Yeah, that's fine. You can open for free, I guess.
No, I tried to open actually, but the thing is at that time they asked something. I'm on H1B, so they didn't give me chance.
Oh, okay. Yeah. I don't know if there is any other way you can use Thinkorswim. Just try installing Thinkorswim to see if you can get the platform working without TD Ameritrade. I've never tried that, but just.
Okay. Oh, Thinkorswim itself is a separate app, something?
Yeah, it's like a different app. You can. I think you can integrate TD Ameritrade and 2 other brokerage firms within Thinkorswim, if I'm not wrong.
Okay. Thanks. Thank you.
VG.
Hey, thanks, Dan. And Vishwa, thanks so much. It's a great session. I have a question. So I usually use Finviz to check the support and resistance levels. So there are multiple moving averages, and they also show the triangles, some kind of thing, right?
Yeah.
So how do we set that in the Thinkorswim? Because the Finviz, it shows only the last 1 year, the current year's levels. And,
yeah, I don't think you can do the chart pattern itself on the Thinkorswim. Well, you may scan them here. Let's say you go here, you remove these, you add a filter, and then you do steady here. I think you have the candle patterns, like the which candle has formed, like the evening star dojis and 3 inside downs, like back to back. I don't think you actually have a scanner where you can draw that. I use Finviz just like you do to look for the I use this, and I majorly look at one more thing called multiple bottoms and multiple tops. And then I try to restrict my market cap to large caps here. So I look at these things, and then I'll just go chart by chart. So look at this, right? Buck B, right? It has hit the same level multiple times, right? So what I'll do, I'll go back here, and then Buck B, right? And that's how I do, like weekends and all. So I'll just sit here. I'll validate what they're saying is right? So here it appears to be having some kind of resistance. It did once, twice, thrice. It's trying it again. So if it hits that point, I may just go ahead and short it.
Okay, got it. I got it. Thank you. Thank you so much.
Or if it is going above that, that's a breakout. Like this, see, right here, we found a breakout here. So what I'll do right in front of all of you is like, I'll just break out. See, that's it, done. If it breaks with volume, I will enter into this.
Got it. Thank you. Thank you so much.
Yeah, no worries.
Suresh.
Hi. For your session, you were explaining about V-Vap and the exponential moving average. So my question is, are those two enough to take a decision to whether to get in to make a call or get into a put?
Well, if that's your edge, if that's your trading strategy, I would personally say that's a good place to start, the VWAP and one moving average. I mean, you can trade ORB. I like ORB. You might have some choppiness in the VWAP as well sometimes. Like, you may not exactly get it touching there and then coming back, right? So let's take this for an example, right? So you take Buck B on Friday, and then it's cutting the VWAP, and then you take a put position here, and you have to make sure that your stop loss is just VWAP. Like, if the next candle turns around and crosses the VWAP and closes, you have to exit the trade. You can trade with any indicator here, I'm telling you, but I mean, VWAP has a better edge, but if it goes down, goes above, closes there, you have to exit there. You have to, or you can set a limit like this, like, okay, so from here to here is the room I'm giving. If it cuts the VWAP down and goes up, I will wait till here. But usually the action happens around VWAP. So you should be very strict with your stop losses with VWAP. If it cuts it, you exit. If it goes down, if it continues, you use this moving average. It's a 21 exponential moving average as your trailing stop loss, right? So once it's cut here, you will lock your profits here, right? So that's how you do. Yes, simple answer is yes. If you know how to manage your stop losses, you can use just this and this, just these two lines. You don't need ORB.
Appanna?
Thank you, sir. Hello, sir. Thank you very much for this very informative session. I have one question regarding applying the screeners, right? Basically, the watch list. Obviously, there are so many, almost 5,000 stocks in the market. So how do I go about like really creating watch lists that are where I can apply the scanners kind of thing? You showed a lot of watch lists you have, but how do you go about building those watch lists?
Here, so you go to Market Watch, go to quotes.
I mean, like, what are the criteria you generally use?
For me, the criteria, the stocks I like, man. Okay. What are the stocks you like? What do you like? You like Tesla? Add it to your watch list, right? I mean, for example, just give me some random name. NVDA, for example. I think I already have it, for example, right? Maybe I don't. Okay, so I just added it, right? See, NVDA is there now. And then you give me some other name. I just type it here and click somewhere. It's added to my watch list. That's it. You just pick the stocks you like. There is no definitive rule. All you have to do is go here, go to the yearly charts, look at the charts, one by 1,000 stocks, find the stocks that are breaking out. Looks like Nike has just broke the all-time high here, but then you also have to look at the volume, and based on that you prepare your watch list. I have two watch lists. I have one this is my long-term watch list, and then I have a day trade watch list. These are the ones that I use for day trading. Like I change this day to day, and these are the stocks that if I get an alert from any of these, apart from these, I will just take a trade on this also.
Got it. Okay. Thank you, sir.
No worries.
Yeah, I think that's all. Oh no, Shashi is back again.
Yeah, and we'll take this
Shashi,
last question, Danu, and we'll close it.
Hey,
Yeah,
I have one last question. That is, I see that you have a SPY in your daily trading chart list, right? Why do you trade SPY? Why not SPX?
I have not traded SPX till now, and I don't know why I don't do it. I think I can. I don't know. I just stick with SPY.
Okay. That's because I see with SPY, if you want to get the same impact, right, you might have to trade like 10 or 20 something. But with SPX, if you trade one, maybe it's a cost saving from a fees perspective. But at the same time, I know it goes both ways. I mean, for me, I see it's much more volatile than SPY. So I just wanted to get your expert opinion. Like, is there anything?
Nope, no reason. Just that I stick with SPY. That's all. I think I can trade SPX as well. There's no reason why I should not.
Yeah, because it's just the candles and the indicators that we can use. So yeah, I
Right.
just wanted to ask you that question. Thank you. That's all from my side.
Yeah, and I think we have to stop here because I have to take my car for service. But I hope you guys have enjoyed the session. And then the word of caution again: paper trade before you drop your real money, and keep looking at these charts. And this is purely for day trading, guys. Don't confuse investing with day trading. And then look at the charts, have your zones, supply demand, come back to the daily intraday charts and trade your thing. If you have any questions, I'll see if I can answer them back if they are in the chat once I'm back. So then over to you. Thank you all.
Yeah, thank you so much, Vishwa or Deviate Standard, for taking time. Nobody spends time, for free. Everybody charges one or the other thing. But here in Things Savio, we try to volunteer, share what we learn. Go reach out to many as much as we can. Also, good point. If you have all observed, he dedicated or bought up the name whom he learned from. So not trying to be sentimental, but that's the values we try to keep up here with Things Habio, along with all other Things Habians. I am learning, Vishwa is learning, many are sharing their good thoughts, all that. We take good from it, improvise our mistakes or where we are lagging, and keep moving and learning. That's all we can say. We'll continue to do these sessions. That's Sai's thoughts. Of course, as a volunteer, that's Vishwa's call as well. But as we grow, better ways, all that we will try to improvise along with him. I will try to do mine. Thank you, Vishwa, for your time on the weekend.
Yeah, no worries. Definitely allowed to do this more. Talk to you all later. Thanks. Bye.
Yeah, thank you all who joined. Thank you very much. We'll learn together and achieve bigger success. Bye. Have a good weekend.